action on the monetary policy side over the next 6 months. And I do believe that some central banks will probably need to act.
Yeah, and it's not just the energy shock, Luis, but also you talk in your report about the terms of trade story encapsulating obviously more than just energy. And for many of these economies that tend to be quite resources heavy dependent, you know, what are going to be the knock-on effects of the second derivatives shocks that are coming through from the energy shock? And that could be, you know, demand destruction on metals, for example.
Yeah, it's very interesting because some of these economies like South Africa and even Australia outside EM, you know, previous to the conflict, we were pricing terms of trade paradise, right? I mean, gold up, metal complexes up, energy values, energy prices down. So in both sides of the balance sheet, these economies, they were actually benefiting from the environment. And here we are now in a squeeze. Both sides of the balance sheet, revenues and cost, which is the energy side, they are squeezing some of the economies. South Africa is a very good example to that. The terms of trade index in South Africa has come down by more than 25% since the peak before the conflict. So, I mean, it's been quite a squeeze, and it's obviously going through the currency as well. So now we investors, analysts, investors, we are actually, you know, scrambling to find out what is the fair value for some of these commodity currencies now.
Yeah. Luis, one final question I want to round up with. I've been talking about the dollar benefiting from its safe haven status, which again is a paradigm shift from where we were for most of 2025. And I wonder if the USD continues to strengthen, whether there's going to be more pressure on local emerging market central banks to do something about the depreciation of their own currencies. Are you expecting more interventions in the coming months?
Well, I mean, so far so good, Jumana. I think that, and it's been the reaction, obviously, it's been an environment of destruction of P&Ls everywhere. But let's be honest, I mean, the performance on the MFX has been quite mild compared to the shocks, for example, we are seeing on the equity space, the shocks in some parts of the credit markets, right? But I do believe that, you know, if things get more severe, some central banks might react, which actually re-energizes this theory of potential interest rate hikes, measure interest rate hikes over the next 6 months, you know, if this environment doesn't change substantially in a few months.
Yeah. Okay, Luis, thank you so much. Always good to chat to you. Luis Costa, Head of Emerging Market Strategy at Citi. Well, Mozambique has surprised markets by repaying about $700 million to the IMF ahead of schedule and in full. The move has raised fresh questions about the country's strategy and relationship with the lender. Our chief Africa correspondent, Jennifer Zabazaja, joins us from Johannesburg. So, okay, interesting development. Why did Mozambique choose to repay the IMF early? What's the thinking behind the move?
Yeah, Jumana, that's really the question a lot of markets participants are asking. We don't have an official statement from the government at this point in time, but the clearest read that we can get is potentially the country is trying to signal a bit of independence and financial independence from the fund. We should note that it had been in quite a difficult position prior to this happening, although it did take most market participants by surprise. We had been hearing that this was potentially a technical hurdle in some of those talks that Mozambique had been having with the IMF. This potentially does clear some of those hurdles, but still, it doesn't mean that everything is all clear moving forward, because we do know that the government is still looking to perhaps start a new program. So yes, potentially this is an effort to reassure investors, but still we should note that what we heard from Standard Bank is although this potentially could help institutionally, it does potentially drain the country's foreign reserves, especially considering that it wasn't too long ago that the IMF had described the debt as being in distress.
Jen, what is the read across to Mozambique's ability to secure a new funding program from the IMF now that they've repaid this one?
Sure. Bloomberg reporting is still potentially looking at the fact that is looking at the fact that this will still be on track for August to have a post-review with the IMF. So that's still on track. But we should still note again, the country had been in debt distress as described by the IMF not too long ago. That was largely due to debt-funded overspending and also delays to some of the LNG projects. And so the read across really is that potentially the IMF is still quite cautious about what this means for the government, especially because a lot of the considerations by the fund are still not addressed. You were just talking to Luis Costa about some of the financing in terms of currencies. The Meticall has been something that the IMF has tried to call on the government to let float freely. This is a difficult time, especially considering the implications for what a free-floating Meticall could be on citizens. That could cause some unnecessary distress among the citizens. Not just that, there had also been calls to address some of the public spending wage bill. So these are some of the things that are still left unaddressed. And so although we do expect for the government to seek a new program, the questions are, will they be able to, and are they willing to address some of these ambitious reforms that the fund and other multilaterals have called on?
Jen, thank you so much. Jennifer Zabazaja, our chief Africa correspondent in Johannesburg. And coming up, we're live to Tel Aviv to speak to Recommends University's Mayor Javid Vandar after President Trump's warning of increased attacks over the next 2 to 3 weeks. This is Bloomberg.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to Horizons Middle East and Africa. I'm Jumana Bersachi in Dubai. Prime Minister Benjamin Netanyahu says Israeli and U.S. attacks on Iran have eliminated Tehran's abilities to produce nuclear weapons as well as ballistic missiles, removing what he described as 2 existential threats to Israel. The Prime Minister, who is facing corruption charges at home, is looking for a political win. But is he going to get it? Joining us now to discuss is Dr. Mir Javid Anfar, Iran politics lecturer at Reichman University. A lot to discuss with you. Before we talk about domestic politics within Israel, I do want to go back to Trump's address overnight. And I want to ask you your read on the situation and whether this was Trump prepping the world, perhaps implicitly, indirectly, for an intensification of operations and perhaps even ground combat.
Well, before I
answer that question, I would like to have the caveat, please, Jumana, that it's extremely difficult to really predict what President Trump will do. And his statements are very difficult to decipher. It's almost a form of encryption. You need a special decryption software to realize what he's trying to say, because from one day he changes his message to the other. But I think President Trump wants this war to end as soon as possible because of the damages that are being done to the global economy, and also he's standing for re-election. His government is going to be standing in the Congress and the Senate. So it's very difficult for him to get a win and to finish as quickly as possible. And I think he's trying to force the Iranians right now to come to the negotiation table, to first and foremost to open up the Strait of Hormuz, because this is turning out to be a challenge for the global economy, much bigger for China than the US. 37% of China's oil passes through the Strait of Hormuz, whereas only 7% of the US oil goes through there. But in any case, for President Trump, he sees the price that is being imposed on the global economy. He wants this finished, but he wants this with a result. He wants to walk away with something tangible, which starts with opening up with the Strait of Hormuz, and if he can get it, with Iran agreeing to all his nuclear demands. Whether that will happen, we don't know. But at this time, the infrastructure, the bombing of Iran has started in earnest of its infrastructure. Now they are bombing steel production plants and other government, important, tangible and profit-making government businesses in Iran, to force them to accept America's terms.
Okay, so let me ask you this. Can President Trump paint this as a victory if the walk away or the war ends without extracting that enriched uranium stockpile from Iran?
Just leaving it as it is would be looked upon not very favorably, if I can be diplomatic about it. Maybe he'll find a way of getting the IAEA to inspect it, or the IAEA to remove it. But leaving it there would be very dangerous for the state of Israel and for the United States, Jumana. This is not something that he would want to have on his resume. But I also have to say that the Iranians also have a lot of considerations which we must put into this equation. Iran's economy is doing very badly. I mean, yes, Iran is selling more oil now than before the war, which is really a contradiction in terms of what President Trump wanted. But it's going to be very difficult for Iran to get the money from the sale of its oil back to its coffers, because until now they tried to use Dubai. There were Iranian front companies that were illegally using Dubai in order to launder money, sanction money back to Iran. But now, after the policy of attacking the United Arab Emirates, I have to say terrible policy for Iran, and a very costly policy, the UAE is cracking down on this. So it's going to be much more difficult for Iran to get money back to its economy. And this is also going to put a lot of pressure on the Iranians, because the Iranian rial has been in a free fall beforehand. And Iran really needs to also end this war with a gain. But I think President Trump will find it very difficult to walk away without getting that enriched uranium out.
Yeah, people are very focused on perhaps the political and military aspects, but less so on the economy. And you make a very good point there. I want to ask you about the Israeli Prime Minister's televised address a couple of days ago. And it was interesting that he actually said that Iran doesn't pose an existential threat anymore, and also talked about the military successes that the joint operations have achieved. What did you make of that address?
First and foremost, Jumana, Iran not posing a nuclear threat to Israel anymore, this is not new. This already happened in June. Iran has not enriched any uranium since June 2025, after the 12-day operation by the State of Israel. So Iran already does not, from a nuclear point of view, pose a strategic or existential threat, whichever way you wish to put it. So this is not something new. But regarding the missile program, Jumana, yes, this is a serious threat. The Iranians were trying to build new production lines, which would have enabled them to produce more ballistic missiles, which would have overwhelmed our anti-missile system in Israel, posing a very serious threat to our security. And this is one of the reasons Israel attacked during the recent war and wanted this war. And the other reason was also Iran was going to move some of its missile production capabilities on the ground, thus making it much more difficult to strike. So if we're just focusing on the missile aspect of Iran, the threats posed by Iran, Netanyahu is right, Israel had to do this, and the results from what we know have been significant. But regarding the nuclear program, no. We already knew this since June, Iran cannot enrich.
Right, right. Mir, always good to chat to you. Thank you so much for coming on. Mir Javidanfar, Iran politics lecturer at Reichman University. Now, the Iran war is disrupting global aviation with soaring jet fuel prices, airspace closures, and widespread flight cancellations hitting airlines worldwide. Carriers are being forced to reroute flights, cut capacity, and absorb sharply higher fuel costs, putting pressure on fares and schedules across global networks. For more, we're joined now by Danny Lee, Bloomberg's Asia aviation and transport reporter. Well, this morning we've been taking a look at where oil prices are up more than 5-6%. Obviously, this has a real impact on airlines. So how are these higher jet fuel prices impacting airlines around the world, not just specifically in the Middle East?
We've already heard from airlines talking about a doubling or more of jet fuel costs. Already, airline CEOs are saying they're having to raise airfares by up to 30%. So they are having to raise fares quite significantly in order to cover the cost, the volatile cost of jet fuel. And so there is a lot of pain out there. There is also airlines who are not protected from fuel hedges. We've heard a little bit about that. You know, the likes of the large American and Chinese carriers and low-cost carriers are not protected. So they're eating up the very volatile cost of jet fuel in full. So there is a lot of pain there. We heard from Malaysia Airlines CEO today saying that they're having to absorb a 140% increase in jet fuel costs. So overall, we are seeing some pain, and with airfares spreading, demand being dislocated. So far, it seems like passengers are willing to pay higher prices because of that gap left in the Middle East.
And is it reasonable to expect more disruptions to operations, reduced schedules in light of the higher jet fuel prices? What do those dislocations look like from the war?
Yeah, we are seeing actions taken. Airlines, for example, United Airlines has already decided to cut about 5% of its capacity, particularly routes which now are more marginally unprofitable. In places like in Southeast Asia, in Vietnam, where there are risks of jet fuel shortages, we're seeing up to 30% cuts in capacity by domestic airlines. So overall, there is a very concerted effort to try and add capacity if you're a European or an Asian carrier where their demand is because of the Gulf dislocation. But in other parts, you're just trying to conserve where it doesn't make sense to fly, cut the flights outright. So there's a bit of a rebalancing going on overall in the aviation industry.
Yeah, makes sense. Danny Lee, thank you so much for your perspectives. And also, good to have you with us live from an airport. I believe you're in Hong Kong airport as well. Good to see. Okay, let's round up the show taking a look at how some key financial markets are responding to President Trump's national address overnight. And you can see that it is a sea of red out there. We've got S&P futures now down 1.3%, NASDAQ down 1.6%. Take a look at European markets, also pointed to open substantially in negative territory, down 2%. And then not just that, but take a look at oil as well. Once Trump started speaking and it became apparent that they were not winding down military operations, and in fact, quite the opposite, you saw this big uptick in prices of some of these key energy indicators. Brent now $107 a barrel, up almost 6%. WTI just shy of 105, up almost 5% as well today in trading, as investors really accounting for the possibility of not just this going on for another 2 to 3 weeks, but further intensity and intensification of military operations over coming days. That is it for our show, Horizons Middle East and Africa. I'm Joanna Brisacci in Dubai. Stay with us for Daybreak Europe. This is Bloomberg.
Everybody has a moment where they put into action all they've practiced, where they step up to a challenge and either succeed or fail. But what are those moments for some of the world's most influential leaders?
It was a rough and tumble world, and I thought, okay, I can rise up, I can play this game, and I did play the game.
It was great, and it was depressing, and it was disappointing.
My chair at the time sat down with me and said, "Succession starts now."
I'm Francine Lacroix, an award-winning journalist. For the last 25 years, I've interviewed world leaders, bank bosses, even fashion icons. I'm often asking about the news of the moment. But I've always been curious, who are these people as leaders? Join me for the podcast version of Leaders with Francine Lacroix. I'll start your week with conversations that explore what drives the world's most influential people, how today's leaders got to where they are, where they're going next, and how they've transformed their organization in the process.
Make decisions. A poor decision is always better than no decision.
You have to have truth tellers around you, and you have to be willing to listen.
You don't want to be setting strategy in the middle of a transaction, that's for sure.
Do it for the right reasons. Don't do it because of FOMO.
We'll also learn lessons which we can apply to our work and daily lives. Tune into the podcast version of Leaders with Francine Lacroix. Listen and watch on Bloomberg Television or wherever you get your podcasts.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe. I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie. This is your opening trade.
Only on Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil surging, stocks sliding as President Trump's address dims hope for a quick end to the Iran war. The U.S. leader vows to hit Iran, quote, extremely hard, threatening to attack the nation's electric plants if no deal is reached. While Iran's president appeals directly to Americans to look beyond the rhetoric. And back to the moon. Humanity set to return after more than 50 years as Artemis 2 launches an historic 10-day mission beyond Earth. Let's get to these markets then, because boy, did we see a reaction after the Trump speech. Terry Haynes of Pangea saying basically Trump punctured the market's Iran fantasy that this was going to be over quickly and soon. Did not seem to be the case. In fact, Trump didn't give us many details at all about what's planned for the next 2 to 3 weeks, except those electric plants will get hit if Iran doesn't meet some of the conditions he had laid out. Now, this was after sort of teasing us all day long yesterday that perhaps there would be a quicker end than the markets had been thinking. That took oil right down, but right back up again, above $107 a barrel. Now, do remember, we were above 119 at the peak of this, so we're a long way from that, but still, these bouts of volatility keep coming. New York crude as well, close to 105. That spread very narrow at this point. And then the 10-year yield, in fact, across the board, we're back up by about 5 to 6 basis points at this stage as things deteriorate into the European session. You're seeing it around the world as well, with yields rising. Let's look at futures. European futures are pointed lower. In fact, they're at their lows of the session, down close to 2% here on Euro Stoxx 50 futures and the Nasdaq 100 futures following them close behind. And again, it is the war on trade with the dollar stronger once again. Some other risk events for you today then. UK time 7:30 a.m. we get Swiss CPI, that's for March. Then at 9 a.m. the ECB publishes its economic bulletin. And then all the way at 1:30 p.m. UK time we get US jobless claims. Oil surging after President Trump used his primetime address on the Iran war to say the conflict is very close to completion. But he also warned the U.S. plans to launch fresh attacks within the next 2 to 3 weeks.
We are on track to complete all of America's military objectives shortly, very shortly. We are going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leader's death.
I'm joined by Bloomberg's Washington Deputy Bureau Chief Laura Davison. Laura, characterize this speech for us. The market's certainly taking it as a hawkish speech. It was the first address to the American public since the beginning of the war.
Essentially, this speech was a continuation of what we've really heard from the president over the past several days. There weren't new details. There was no new plan on how to end this war. In fact, he was a little bit murkier on the timeline for how he saw this ending. He said that the U.S. was close to reaching its objectives and it would soon end, but didn't specify that necessarily the war would end within 2 or 3 weeks, as he did a couple days ago. He said that the U.S. would continue to ramp up, in fact, military attacks over that period, while also suggesting that talks were going on. So again, those same mixed messages that we've been getting from the White House for several weeks now. It was even interesting. Trump, during the speech, said that oil prices will soon be coming down and that the stock market will soon be going up. As he was speaking and saying those words, the market was doing the exact opposite, just indicating how displeased and how much risk there is in the system, both politically for the president as well in markets as they're trying to ascertain what the future of this war looks like.
Yeah, and, lots of messaging from Iran to the effect that there are no direct or indirect talks ongoing. And, it was a really interesting day yesterday because I feel like Trump did tease the American public and the markets by, giving interviews to plenty of outlets suggesting that perhaps the war would end quicker. There has been a lot of mixed messaging, hasn't there?
There has, and this letter that we saw from the Iranian president is a really unusual move for a leader of that country to come out, sort of put out this open letter to the American public in English, sort of saying that the relationship between Iran and the U.S. has been long understood, saying that the Americans need to look past the rhetoric that's coming from the Trump administration, and really was a sign of strength from Iran, saying, look, we are here, we are not defeated, really clashing with the rhetoric that we've heard from the Pentagon and from Trump that Iran has been decimated and their military capabilities have been destroyed. Despite having some of these sites in the country be attacked, they've been able to use lower technology missiles and drones as well to be able to fight back effectively, really calling into question that even if the U.S. were to pull out, would Iran continue some of these strikes against U.S. allies in the region? And is this war even in Trump's control anymore? The answer seems to be no.
Laura, thank you so much. Bloomberg's Washington Deputy Bureau Chief Laura Davison there. Well, stocks in Asia obviously reversing their two-day rebound. Let's get an update from Winnie Su in Hong Kong. It's red once again across the board pretty much, at least for equities, Winnie.
Yeah, good morning, Bonnie. As you mentioned, we've been talking to investors actually throughout the morning, and the sense that we're getting is really that deep sense of disappointment. And if I can take you back in time a little bit, actually, we started the day in the green, as you just mentioned, and there was quite a lot of hope when it comes to potentially this being a declared victory or some sign of clarity, and actually a pop in terms of optimism when Trump mentioned that the U.S. is getting close to achieving these strategic objectives. And then things really just went south from there when there is these concerns around potential strikes on Iran and Iranian facilities in the next 2 to 3 weeks. So you can see that markets really trading on these headlines, and things have been very volatile. And now we're making session lows with the MSCI Asia down about 2%. You flip the board and take a look at how these regional benchmarks are doing. You're looking at dragging the overall benchmark is the Kospi index down about 4%, pretty much erasing half of the gains that we saw yesterday. And also Nikkei 225 down about 2%. So these Japan and Korea actually rely very heavily on these oil imports from the Middle East. So higher oil prices hurting them more than the likes of China, for example. So you're seeing CSI 300 here faring slightly better, given that China has these oil supplies and also the strength in renewable energy. Now you flip the board and take a look cross asset, because although also under pressure are Asia's currency and also bonds. You're looking at a stronger U.S. dollar weighing on overall Asia currencies. The gauge here down about 0.1%, and Japanese yen back to that 159 level against the dollar. When it comes to the JGB 10-year yield, up about 8 basis points. That is coming also after the JGB 10-year auction seeing its weakest demand since May, showing that there is still lots of concern concerns around the inflationary pressure. And we are also pricing in right now 70% of the BOJ to hike rates later this month. Back to you, Bonnie.
All right, Winnie, thank you so much. Winnie Su there in Hong Kong. It's going to be quite the day. Iran's president issued an open letter to the American public, urging them to look beyond political rhetoric. The letter also suggested the U.S. entered the war as a proxy for Israel and stated Iran's actions in the conflict are grounded in self-defense. Let's bring in Bloomberg Horizon's anchor, Jumana Bertzacci. Jumana, what did you make of this letter? It's not very often that something like this happens. Give us some context.
Yeah, that's right. And Vani, also let's just remind everybody that this letter was addressed to the American public by the Iranian president, but this was before Trump's national address overnight. And I should say it's the early hours of the morning over here in the region. Still no official or unofficial response yet from Iran. But what the Iranian state TV did put out before the speech was a suggestion that Iran had never asked for a ceasefire. So that's kind of the starting point of where we're at. Now, yesterday, the Iranian president, Mr. Pezeshkian, did release this open letter to the American public, full of a lot of rhetoric. He was really questioning whether Washington is putting America first or acting as a proxy for Israel, is what he has described in that letter. He talks about rising oil prices. He says that Iran are acting in self-defense. It's not really clear what the objective of this letter is, but clearly trying to play along partisan divides or to appeal to some segments of the American public. He knows, of course, that oil prices and gasoline prices have been rising given what's been happening around the Strait of Hormuz. But again, something that I would just want to go back to, President Trump himself put up a Truth Social post yesterday saying that the Iranian president had requested a ceasefire and that he was from the new regime. It's also worth reminding viewers that President Pezeshkian was around in the old regime with the former supreme leader, and he doesn't have a lot of clout in terms of decision-making when it comes to some of those key nuclear and military decisions that need to be made. So what many experts in the field are saying is perhaps you need to be listening a little bit more to the likes of the new National Supreme Leader, the man who replaced Ali Larijani, and the Speaker of the Parliament, Ghalibaf, who's been quite active on social media the last couple of days. And those are perhaps the people that would likely more reflect a change in sentiment from Iran if it indeed is going to come through in the next 2 to 3 weeks.
Jumana, we should mention as well that the letter was a couple of hours before the President of the United States addressed the U.S. public. Now, regarding the Strait of Hormuz, we didn't get any clarity from President Trump on what the U.S. plans to do, but we did have the UK Prime Minister saying that his Foreign Secretary was gathering a group of 35 Foreign Secretaries, right, to talk about it. And the UAE has actually gone to the United Nations. Bring us up to speed.
Yeah, I think President Trump has made it clear the last couple of days that he wants to de-link the fate of the strait, so to speak, with military operations and leave it to other countries to sort out, especially those countries that are more reliant on the oil that passes through the strait. China, a key one. He's explicitly referenced China. Now, when it comes to some of those efforts, the UK Prime Minister Keir Starmer did refer to a meeting that's going to take place today that will be chaired by Yvette Cooper, and there will be, it's expected around 35 countries are going to participate in this virtual meeting to discuss potential economic, diplomatic, and possibly even military measures to help reopen the Strait of Hormuz. The preferred channel obviously being diplomatic at this point, these countries getting together to assess whether Iran will come to the negotiating table. If that fails, then perhaps go down the economic route, apply more sanctions. If that fails, then as a very last option, military. But many countries and European nations have expressed their reservation about getting involved militarily. As for Gulf nations, we know that yesterday the UAE invoked Article 7 at the UN Security Council, and essentially what that means is they're asking for diplomatic cover should they want to choose to enter or get involved in the reopening of the strait militarily. And that is what that Article 7 provides for. It allows for the use of force in the face of an act of an aggression or a threat to peace. So this is what the UAE had put forward. The UAE officially one of the few Gulf Arab countries that have said that they would be open to participating in naval escorts or any maritime operations to help reopen the strait. and of course in the last few days, as we've been speaking about, have been very vocal about an outcome in which Iran still retains sovereignty of the Strait of Hormuz being something that is unacceptable to them and akin to economic terrorism. So definitely some motions from around the world to deal with the issue of the Strait. Whether it's going to yield anything is another big question.
Okay, Jumana, thank you so much. That is Bloomberg Horizons anchor Jumana Brzezinski. Risk-off sentiment then gripping markets today, that as concerns grow that a prolonged war will keep oil prices higher and weigh on economic growth. Let's bring in Mark Cranfield, strategist at Bloomberg M Live. So, Mark, the war trade is back on. Oil yields up, Bitcoin, gold lower. What did the market expect to hear from President Trump last night?
They didn't get at all what they wanted. The markets came into this, investors, particularly in the equity markets, they were expecting some kind of backtracking, an off-ramp from all that's going on in Iran, and Trump probably going to tell them that it's ending maybe even before the weekend and that they could all get back happily to buying equities. That was not the case at all. What they got instead was a warning that this could go on for a couple more weeks, a dialing down on the heavy rhetoric, as you've been hearing from the other guests, and investors really did not like what they heard at all. So we've been seeing ever since the Trump speech, heavy selling across the board here. US equity futures having a really rough day, in line with the Asian markets that you heard Winnie talking about. Now, one of the things that will really scare people is that yesterday we saw Korean equities, for example, having a really good day, but on relatively light volume. Today, they're reversing all of that on very heavy volume. That's a complete contrast. It tells you that the people that were on the sidelines do not like what they've heard at all, and they're selling aggressively into this. European markets are going to be getting going shortly, and the European equity futures are very heavily down. Looks as though they're going to reverse all of this week's gains pretty quickly as the European traders come in. It will be compounded by the fact that for a lot of people, this is a long weekend. This is the last trading day before European markets go into a 4-day break, and also the same for London as well. So the pressure to sell today will be even more intense than it usually is. It could be a pretty ugly session across Europe and the United States.
Yeah, and we have been seeing that pattern anyway over the last several weeks, right, Mark? You know, selling going into the weekend, and as you say, it's a long weekend as well. Now, I do want to ask you about extremes. Are we at least away from the extremes? So, for example, the peak for WTI front month was $119.48. I mean, we're well off that. Can we at least say that perhaps the market won't go to those extremes again?
I think if you look at the futures contracts, it's always slightly misleading because you have a steep futures curve, and we've now moved to another contract. It's different to the one that we were trading in March. So you're not exactly comparing apples with apples. Underlying prices are extremely high, and what people will be more interested in the fact that how long will oil prices stay above $100. That's become a kind of a threshold here. That's a pain point. That tells you that inflation isn't going to go away quickly. I think today people were expecting that we would get an averaging down, that oil prices would fall into a lower trading range. That is not the case. So that means that's partly why we're having a decent sell-off here in bonds. That was compounded by a very bad JGB auction. It was an awful day to bring a 10-year Japanese auction. It was one of the worst we've seen in the past 12 months, and that's helped to make the losses even worse across treasuries and Australian bonds. That's a bad setup for European markets, particularly for German bonds. Next week, we've got treasury auctions across the board, 3, 10 years and longer as well. If we don't resolve this before we go into next week, it could be really nasty for the treasury auctions. You can imagine Scott Bessent will be a pretty nervous man right now. He's been telling President Trump that yields are coming down. That is not the case. Treasury yields are going up, and JGB's just made it a lot worse today. It's going to be a very nasty day in the bond markets across the world.
Yeah, it's, as you say, a worldwide phenomenon at this point. Also, the dollar index heavily stronger again today, and the outlook for the likes of India and some emerging markets, you know, it's not great, is it, Mark? Do we continue with this trade?
We're pretty much falling back into the scenarios that we saw throughout March, where people grab the US dollar, they sell bonds, they're selling equities. Oil is the only thing that people really seem to have any faith in at the moment. Precious metals as well, really in trouble again. So it's a question for these people don't have any faith at the moment in the kind of relationships. Correlations are broken down so badly that people don't really know where to go. At the moment, the only thing they know is that high energy prices are going to be very bad. And now it's a question of betting on when central banks are going to respond. There's talk that the Bank of England could be one of the first to go with an interest rate hike within the European space. European Central Bank is being a little bit slower. We do have the Bank of Japan coming up this month. That'll be a very good indicator. If they move with higher rates, a lot of people will have to follow. And then, of course, you've got the Federal Reserve as well. They're doing their best to stay on the fence. But if US inflation data spikes higher next week, even they will be drawn into it as well. It is a very difficult scenario for macro traders. They'll be watching what the central banks have to say and how they move. If oil stays in this kind of trading range throughout April, all bets will be off. Central banks will have to think very seriously about hiking rates, and traders are well aware of that.
OK, Mark, thank you so much. Sobering words there. Mark Cranfield, strategist at Bloomberg M Live. Still ahead, how the ripple effects of President Trump's tariffs are reshaping Canada's auto industry as Stellantis explores options for an idle plant in Ontario. First, though, history in the making as NASA returns to the moon, sending astronauts further into space than ever before. That's next. This is Bloomberg.
To the minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline bad news is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
Our mission is pretty simple. Have a safe flight and bring these guys home. Yeah. It's that simple. And that's what everybody's foresight focused on. This first 12 to 24 hours is going to be testing the systems that we haven't really had the opportunity to test because they had a crew on board.
The former acting NASA administrator and Lockheed Martin space president Robert Lightfoot speaking on the historic launch of Artemis II. NASA astronauts have blasted off then on a 10-day mission around the moon, marking humanity's return to the lunar neighborhood for the first time in more than 50 years. The US and China are racing to put humans back on the moon, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow reports from the Kennedy Space Center in Florida.
4, 3, 2, 1, booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time
in more than 50 years. Artemis 2 is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, the crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis 2 is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis 2 are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Coming up, the Trump administration is set to announce new tariffs on pharmaceuticals. More on that next. This is Bloomberg.
U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers Jobs Day like Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Bersetchi. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
Welcome back to Bloomberg Daybreak Europe. Now to some other top stories we're following this morning. Bloomberg has learned that Emirates Global Aluminium, the biggest producer of the metal in the Middle East, has halted production after an Iranian attack on its facilities over the weekend. Sources say one of its smelters on the outskirts of Abu Dhabi was forced into an uncontrolled shutdown after it lost power. That's caused significant damage as metal has solidified inside the smelting circuits. Bloomberg understands that the U.S. is preparing to simplify its steel and aluminium tariffs by rolling out a tiered system. Sources say 50% tariffs on a large number of derivative products will be maintained, calculated by the actual value of inputs. Many other products will be tariffed at 25% and even others even less. The change follows complaints that the levies were difficult to calculate quickly. Coming up, oil jumps as U.S. President Trump's address fails to offer a clear strategy on the Strait of Hormuz. More on that next. This is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation. Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujin report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Live from London, this is Bloomberg Daybreak Europe. I'm Bonnie Quinn with your top stories. Oil surging, stocks sliding as President Trump's address to the nation dims hope of a quick end to the Iran war. The U.S. leader vowing to hit Iran extremely hard, threatening to attack the nation's electric plants if no deal is reached, while Iran's president had appealed directly to Americans to look beyond the rhetoric. And back to the moon. Humanity set to return after more than 50 years as Artemis 2 launches an historic 10-day mission beyond Earth. All right, let's look at these markets because we're heading into a long weekend and we have the war on trade back. This after, as Terry Haynes of Pangea put it, Trump punctured the market's Iran fantasy that there was going to be a quick end to this, or at least some clarity, particularly around the Strait of Hormuz. We didn't get that. Brent is back. It was above $107 a barrel just a little while ago. The spread to New York crude also less than $3 a barrel now, with New York well above $100 a barrel. And those yields going higher by 5 to 6 basis points across the U.S. curve and around the world, particularly in Japan, where there was a shockingly bad auction as well. So a lot of challenges out there. Plus, we're into this pattern where we see selling going into a weekend because these trades are so volatile and traders don't want to have positions on when everything is just so up in the air, literally. European stocks futures turning much lower now, pointing to a decline of 2% at the open of trade there, and the Nasdaq following them after 2 days of rallying, mind you. The Bloomberg Dollar Index up about 1/3 of 1%. We have aluminum higher, copper higher, we have gold lower, Bitcoin lower. It's all the same trade as it was just a few days ago when the war was very definitely on. Time now for your front page news. The Wall Street Journal leading on President Trump's primetime speech with the headline, "Trump tries to sell Americans on war in Iran." The FT reports that President Trump threatened to stop weapons for Ukraine unless Europe joined the Hormuz coalition. While El País splashes on the launch of Artemis 2 with the headline, "The most powerful manned rocket launches the mission's 4 astronauts on an historic journey." And you can get a roundup of the stories you need to know to get your day going in today's edition of Daybreak. Terminal subscribers can go to DayBGo. So oil prices jumping then after President Trump, in his address to the U.S. nation, signaled an escalation to the war in Iran. He also called on the rest of the world to reopen the Strait of Hormuz, urging them to take the lead in protecting global energy shipments.
I have a suggestion. Number one, buy oil from the United States of America. We have plenty. We have so much. And number two, build up some delayed courage. Should have done it before. Should have done it with us, as we asked. Go to the Strait and just take it, protect it, use it for yourselves. Iran has been essentially decimated. The hard part is done, so it should be easy.
Let's bring in Bloomberg's Middle East energy reporter, Anthony DePaula. Anthony, President Trump's speech failing to calm recent market turmoil. Also this idea that, other countries can somehow just take the Strait back or something, diplomatically or militarily. What does he mean, given that the U.S. hasn't been able to do it?
Good morning, Vonnie. Yeah, that speech did fail to calm market sentiments. We've seen massive swings
in crude prices just this week alone, even some 10% swings as we increased at the beginning of the week, fell back over the last couple of days, and now we're back up. It's that kind of vagueness about when the war might end, or will it escalate? And there's that issue around the Strait of Hormuz, Trump kind of disavowing the U.S. need to guarantee passage through that. In fact, only less than 6 months ago, in the U.S. national security document that came out in November, they specifically mentioned the Strait of Hormuz and the U.S. Aim to protect that and protect the free movement of vessels. The free movement of commerce over the waterways has been a tenet of U.S. foreign policy in terms of protecting that for decades now. So if this marks a shift from that, that would be quite a change. As far as European allies and others coming in to potentially open up Hormuz, I mean, we have seen that model before around the Red Sea and the Bab el-Mandeb Strait. There have been international coalitions also with U.S. support there to try to secure shipping through that. At the start of his presidency, Trump went on a month-long, very costly campaign of bombing, aerial bombardment of Houthi positions to try to get the Red Sea and the Bab el-Mandeb reopened. That ultimately didn't solve the problem. It was more negotiations and talking with the Houthis that got the Red Sea open only just at the end of last year. Now that is also in play again with the Houthis over the weekend coming back in the war, launching a missile at Israel, not yet impacting any of the shipping going through the Red Sea, but that remains a risk. And so the real risk here is Hormuz continuing to be closed, continuing to cut off that oil flow, and really markets not having any kind of clear picture of when that might reopen, or if there's more risk, more danger, more attacks coming before that happens, Vani.
Yeah, exactly. Anthony, thank you so much for all that context. That's Bloomberg's Middle East energy reporter, Anthony De Paula. The French president says France and Japan are in agreement on the need for a ceasefire in Iran. Emmanuel Macron speaking alongside the Japanese Prime Minister Sanae Takaichi in Tokyo.
C'est ce qui fait que vous venez de le rappeler, nous défendons l'un et l'autre le retour à la...
We both advocate for a return to peace, a ceasefire, calm, and free passage through the Strait of Hormuz. It's also why, since February 2022, Japan has consistently stood alongside the Europeans to reiterate the importance of a just and lasting peace and respect for international law.
Macron's sentiment was echoed by the Japanese Prime Minister, who stressed the importance of maritime security.
Regarding the situation in the Middle East, including Iran, we confirmed the importance of ensuring the safety of navigation in the Strait of Hormuz, maintaining stable supply of critical goods, and achieving early de-escalation. We agreed to continue close communication. In the field of economic security, we shared serious concerns regarding export restrictions on critical minerals and other items. Going forward, Japan and France will cooperate strategically to strengthen supply chain resilience.
Let's get more now with Paul Jackson, Bloomberg's Japan and Korea economy and government editor. So obviously calls, diplomatic expressions of, the wish for maritime security and so on, but that doesn't really achieve anything concrete. What else was achieved during Macron's visit to Japan?
Well, I'm sure that the discussions were very useful behind the scenes, swapping notes on how to respond to the volatile US president and this crisis in the Middle East, what actions could be taken to secure the passageway through the Strait of Hormuz, and like-minded nations discussing that is, of course, of key significance. There was also a slew of MOUs also signed. You've hinted at some of those already in what you said on rare earths, securing supply chains and such like. This morning, Takaichi and Macron went around Astroscale. That's a Japanese space debris clearance venture. So that talks to some interest in cooperation in space as well. But I think the main takeaways really is this is a chance for two like-minded nations to kind of share understanding on how to respond to Donald Trump, and also what actions they might be able to take going forward with the Strait of Hormuz.
Paul, moving on then to South Korea, that's where Macron is going next. Will we see some similar deliverables from there? What are we expecting?
Yeah, I think it's going to be along the same lines, really. France and South Korea are interested in kind of raising their relationship to a kind of strategic level, especially when it comes to technology. Obviously, South Korea is trying to position itself as a leading key player in artificial intelligence, and no doubt France wants a piece of the action, to be involved, to be able to cooperate on that. Also, I think another area where the two nations have shared interests, or even perhaps rivalries, on nuclear power. So I think there'll be plenty of discussions there. In addition, of course, to French interest in the soft power from Korea that we're seeing.
All right, Paul, thank you so much. Paul Jackson is Bloomberg's Japan and Korea Economy and Government Editor. Bloomberg understands that Stellantis is in discussions with Zhejiang Leap Motor on options to build electric vehicles in Canada. If successful, it would be the first major Chinese auto investment in Canada since Mark Carney agreed to reduce tariffs on Chinese-made EVs. Let's bring in Bloomberg China correspondent Min Min Lo. So, Min Min, how likely is it that this moves ahead?
Hey, Bonnie, this is quite a complicated situation. We are understanding from sources that Stellantis and Leap Motor are in discussions to take over an idle plant that has been vacated because Stellantis had moved the production of its SUVs to the U.S., and that was a direct response to Trump's tariff. And as you can imagine, this was something that angered a lot of local workers. Thousands had been laid off. It angered the Canadian government, which then threatened to claw back subsidies for Stellantis. So Stellantis now has a few options, right? It can sell off that plant, or it can bring in new investments to try to use that plant for something else. So they're now in discussion with Zhejiang Leap Motor, but there are some hurdles because these thousands of workers who are laid off are anxious to ensure that whatever plant takes over that space, that it is going to be a full-fledged assembly plant that makes use of local suppliers rather than a sort of plant that just puts together a knockdown kit from China. So there has to be very delicate discussions with the labor unions, with the local suppliers. And then the other question mark is what Trump would do, because he has previously threatened retaliation on Canada if Canada makes a deal with China, right? He threatened 100% tariffs on Canadian goods. He doesn't want Canada to be the backdoor for Chinese EVs to enter the US. But so far, Mark Carney has been pushing back against that with his trip to Beijing in January, where he agreed to lower tariffs for Chinese EVs if Chinese capital enter the Canadian market through joint ventures with trusted partners. So there are conversations ongoing now between the government and Stellantis, and we have to see how that turns out.
All right, and shifting gears now, exports and overseas sales for China's BYD climbed. Surging oil prices, of course, boosting demand for electric cars, Min Min.
Yes, it's actually a bit of a mixed picture. So exports was looking very, very rosy, up by 65% on year. And if you just walk into a showroom in Southeast Asia, you would see just very bustling activity there. And a lot of that is because of the tailwind, right? With fuel prices going up because of the Iran war, it sparked a frenzy to try to maybe think about swapping your gasoline cars for EV cars instead. But then domestically, the domestic sales had slumped by 40% on year. Total sales was also down 20% on year. So that is the increase in exports was not enough to offset the weakness in domestic demand. A part of it is because of government scaling back the EV subsidies, but also because BYD has always positioned itself as that affordable brand in China, so they are particularly badly hit by those price competition as well. But the company is now leaning heavily on exports. It has revised up its expectation for exports this year to 1.5 million, up from 1.3 million cars that was announced earlier.
All right, Min Min Lo, our China correspondent, thank you so much. I just want to mention some breaking news. South Korea had briefly halted Kosdaq program trading just a few moments ago as futures dropped. Futures down more than 4%. And we're seeing a very, very grim session, in fact, in South Korea. The Kospi down 5%, the Kosdaq down almost 6% now after those massive gains that we saw in the previous two sessions. Once again, South Korea briefly halted its Kosdaq program trading as futures dropped. Coming up, Estee Lauder and Puig further talk to create one of the world's largest luxury beauty players. Details next. This is Bloomberg.
About 80% of projects will find it difficult to secure financing. And this is really all because of the level of readiness or preparation. As you know, for investment to occur, you need well-prepared, technically prepared projects, but they must also demonstrate economic and financial impact. So one of the major challenges is the stock or availability of bankable projects in countries. Almost all countries have got good plans and ideas, but when you look at the readiness of those projects, that's a major obstacle. And that is why the African Development Bank, through the African Water Facility, invests heavily in upstream preparation of projects to enable countries to have a large pool of investable projects. The second element that is an obstacle is the institutional and regulatory environment in most countries, which make it difficult for investment to happen.
From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg. It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Welcome back to Bloomberg Daybreak Europe. Now to some corporate news. SpaceX has filed confidentially for an initial public offering, bringing billionaire Elon Musk's rocket, satellite and AI company closer to delivering the biggest ever listing. The filing of draft IPO registration papers to the New York Securities and Exchange Commission puts it on track now for a June listing. Bloomberg has learned that SpaceX could seek a valuation of more than $1.75 trillion. This morning, we're learning more about Anthropic's accidental release of its source code for its popular AI coding agent. Anthropic's chief commercial officer, Paul Smith, has blamed process errors related to the startup's fast release around Claude Code. He adds that the leak was not a breach nor a hack and that mistakes have been addressed. The developer Related Digital is finalizing $16 billion of financing for a giant Oracle data center after months of stop-and-start negotiations with investors. The cash will be used to build a campus in Michigan that would allow Oracle to power applications for OpenAI. The financing is set to close as soon as this month. Bloomberg understands that Estee Lauder and Spain's Puig are continuing now with negotiations to combine, putting the two family-owned companies on track to create one of the world's largest luxury beauty players. For more, let's bring in Bloomberg Deals reporter Manuel Baigori. So, Manuel, what stage are the talks at? They've sort of been in a stop-and-start mode, it seems.
Indeed, Ronnie, but talks are advancing. Progressing steadily, and we are likely to see a potential merger or combination of the two entities as soon as the next few weeks. Sounds like they're polishing and working through a potential SPA as we speak, and talks are advancing in a good way.
Now, so we then would have, two companies that have brands like MAC, Le Labo, Charlotte Tilbury, Byredo. I mean, it would be a massive conglomerate, and it could actually rival L'Oreal at this point. Give us some context around the size of a combination.
Definitely, Vonnie, obviously, Estée Lauder being the bigger player here, but Puig, which until not too long ago was a privately held company in northeast Spain, is also really big. We're talking about $11 billion in market cap, and they're very strong. They have a big market share in especially fragrances among the kind of like the beauty or luxury beauty segment. And combining Estée Lauder and Puig would definitely create a big rival to compete neck and neck with L'Oreal, and definitely it would be a very transformative deal. Bear in mind, we're seeing a rush of deals in the consumer retail space. Companies are trying to integrate and get together as they face challenges from supply chain geopolitics and most importantly perhaps changes in consumer habits. So they're trying to figure out how the next 10, 20, 30 years are going to look like in the industry, and that's why we are seeing some very significant moves at the transactional level.
Yeah, that's an excellent point. And Manuel, these market drops, have they helped at all in terms of pricing these deals? Are giving the acquirer any little bit more leverage, or are these deals sort of being priced differently?
Yes, definitely. I mean, this deal has been now for a couple of weeks in the market, in the public domain. So as the companies navigate and sift through, the terms of a potential agreement, obviously valuation will be a key component to that. Now the question is, this deal makes a lot of logical sense from a commercial standpoint. It's strategic, and those type of transactions tend to progress and make it to the finish line. Then, as we understand from our sources, Estée Lauder wants to ensure that there is a smooth transition and integration, which is very important after a transaction is announced and completed. And for that, they are trying to ensure that the Puig family, particularly the chairman, remains and has a significant say on the combined entity, because they acknowledge that he could play a very important role in ensuring this transaction is successful down the road.
Yeah, so that was one of the key demands. What else do we know about what's being asked of both companies, really, Manuel, and whether, that awful word synergies, whether there might be layoffs and so on, if this does indeed get to the finish line?
Yeah, it still remains to be seen. A little bit too early to call it on that front, Vonnie. As in any big transformative deal, obviously there will be changes and adjustments on both sides and in the combined entity. But at the same time, what we're talking here is mostly a stock deal. It will be a shares deal in which the two families behind the companies will remain very much involved in the transaction and in the combined company, and obviously that also is a good sign, given that the two families have been very deeply involved and successful in running these businesses. So that potentially bodes well for the future of the company.
Yeah, and it's a massive cross-border acquisition as well. A little bit of complexity there. Bloomberg Deals reporter Manuel Baigori always gives us the context behind these deals. Plenty more coming up right here. This is Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate. More than what you need to know, it's what you need to think about.
Good morning, good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg Tech.
This is the Asia Trade.
This is Wall Street Week.
Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Policy is well positioned to address risks to both dual mandate objectives, and I expect the current setting of the policy rate will remain appropriate for some time. However, I will support adjustments in the stance of policy if the evidence indicates the economy requires them.
St. Louis Fed Bank President Alberto Musalem speaking there. And of course, as we heard earlier, this might all change by next week, right? Because if this continues, this war on trade, if oil prices continue to stay high, then the Fed will be really in a quandary. To that point, let's take a look at yields, because we had been seeing them drop quite precipitously, really, over the last few days as sentiment looked to be improving. You know, markets were pricing in perhaps the possibility of a cut by the end of the year once again. Well, that's reversing once again today as we see bonds around the world just sell off and yields go higher. Particularly in Japan, we saw a really horrible auction. It did not go well, and Japanese yields are just booming, up 7 basis points at this point. Let's take a look at grain prices, though, because there is one silver lining here, and that's that food prices perhaps may be contained. So if you see grain prices, that's all the coloured lines at the bottom, they haven't been rising. What the white line is fertilizer prices. That has been rising. That is obviously thanks to the Strait of Hormuz closure, but at least because of bumper crops and so on in various parts of the world, people may not go hungry. And then finally, let's take a look at equity indices, because we had been seeing them rise. That two-day rally very firmly off the table today. To access, search and save all of the Bloomberg terminal charts used on this show and across Bloomberg TV, terminal subscribers can use the function CHRT TV Go. Some other risk events then on the table today. 7:30 a.m. UK time, we get Swiss CPI, that's for March. Then at 9 a.m., the ECB publishes its economic bulletin. And all the way at 1:30 p.m., we get a read on the US labor market before tomorrow's non-farm payrolls with US jobless claims. And we'll be having a conversation about golf and the business of sport with Guy Kinnings, the European Tour Group CEO. That's one you don't want to miss. It's at 9:30 a.m. London time. The opening trade is coming right up next. This is Bloomberg.
You don't think the court was hurt by the perception that it was a political decision?
The court's always hurt, it seems to me, if they
if we look political. One of my concerns, my present-day concerns, is there's too much partisanship. It's true historically that most presidents have appointed justices to the Supreme Court who are members of their own party. The partisanship should not be an overriding factor. What you look at is temperament, learning, background, reputation, whether or not you have those qualities of independence and caution that make for a good judge.
Increasingly, you see dissenting opinions in the Supreme Court aren't quite as civil as maybe you might prefer. And is that of concern to you?
Yes, it's of great concern to me that our civil discourse, our civic discourse, is not civil enough. Aristotle said that a democracy depends on an open debate where you respect the dignity of those with whom you disagree. He said democracies only live if they are sustained over a period of time by a thoughtful, rational discourse, a discourse in which you respect the dignity of those with whom you disagree.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
Bringing you up to them in the news whenever and wherever it happens. I'm Shevrian in Seoul, and this is Bloomberg.
Good morning. It's Thursday, April the 2nd, last day before the long weekend. And here is what's on the agenda. Donald Trump says the war in Iran is ending the end is very close, despite threatening escalation. Oil jumps and stock futures plunge, and a year after Liberation Day, the president weighs new tariffs.
Let's check in on the markets with that as the background context then, Lizzie. And we are risk-off across equity markets. Certainly if you look at US futures and European futures, down substantially, down by 2%. We were vulnerable to this, of course, because we priced in so much optimism yesterday, and then the tone from President Trump was not what the market was expecting, not what the market was positioned for. And so we see a retreat in risk assets. Brent crude goes higher, up by 6.6%, as we don't get any clarification on the Strait of Hormuz. And we're back to thinking about inflation. We're seeing selling in treasuries, selling in bond markets, yields going higher, thinking about inflation and worrying what the ongoing closure of the Strait of Hormuz means for energy prices. The countdown to the opening trade starts right now.
We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong.
So a rare primetime address from President Trump, delivering nothing new really, Anna, and more of a doubling down on his escalate to de-escalate rhetoric. No endgame plan. Actually quite defensive, trying to sell this war to a sceptical American public, and crucially for our purposes, really none of the clarity that markets are craving.
Yeah, not the clarity. The market's very much focused on the escalatory nature of it. There were some lines that could have been interpreted as de-escalatory, but that's not where the market's head is at, and so we see risk off. The dollar is higher, we see stocks are down, futures, we've been through those in the US and Europe, both down, and treasuries pivoting back to concerns around inflation. If you look at what analysts have been saying about this, they're talking about how this was maximalist rhetoric, added to uncertainty, no reassurance of any de-escalation, and of course making the point once again that military assets have been building up in the region. And looking at what this has done to stocks is interesting because it plays into a pattern we've been seeing over recent weeks, that we see risk appetite actually quite positive towards the beginning of the week, Monday through Wednesday, and then declining Thursday, Friday. So we are going into a long weekend, as you pointed out, Lizzie, and that leaves investors nervous.
Yeah, polymarket odds suggest a violent end to this war. So if we look at it, you've got both US ground forces in the Middle East and a summer ceasefire priced at a high probability at the same time. And then if you also look at the stock reaction, there was a brief moment where the market thought, as it was thinking yesterday, that Trump was going to stay on message, this de-escalation message. But as soon as that militaristic rhetoric kicked in, they took a turn for the worse.
Yeah, absolutely. And you think about how assets were vulnerable to this because we priced in something really quite different this time yesterday. This time yesterday, we were talking about positive messaging. President Trump went on yesterday to talk about give quite a de-escalatory account of what was going to be happening, and focusing very much on the time constraints and the extent of involvement in the Strait of Hormuz being limited and all of that kind of messaging. So the market caught off guard perhaps by the tone of this. Shall we move on to commodities? Think about where we are there. Yeah. We've got near-term pricing on the rise for oil, of course. We're at 107, that's the handle on Brent, 107.95, 106.22 on WTI. So both of these, Lizzie, up by more than 6%.
Yeah, even with President Trump's 2 to 3 week timeline, investors warning that it's going to take time for oil flows to return. Nothing about the speech changed the reality that the Strait of Hormuz is essentially all but closed. And his team suggesting that reopening the strait may not be necessary to end the hostilities. Interesting comments in the FT reporting that the president threatened to stop supplying weapons for Ukraine to pressure European allies to join a coalition of the willing to reopen the strait. So oil, as you say, is up, and that is keeping central bank hike expectations elevated.
Yeah, it's interesting that in terms of coalition of the willing, there is at least a coalition of the willing to talk right now, because the UK is convening 35, I think, countries to talk about the Strait of Hormuz and what can be done from a diplomatic perspective, from an economic perspective, and then, failing that, from a military perspective. So there are conversations taking place, but all of the participants, willing to exercise those three levers to very different degrees. I was really interested in the way that the oil market specifically is responding to this very much at the coalface of it. So the very short tenor oil futures. So if we're looking at the nearest spread, looking at the prompt spread then, the two nearest contracts, and you can see that there's an $8 gap between June and July. So we are focusing very much on President Trump's timescale of 2 to 3 weeks and thinking about maximum disruption over that period and then dialing back the disruption after that.
Yes, and we should also talk about the other commodities being affected by this. Gold fell on the speech, again, because it was more of a victory parade than a ceasefire announcement. And when you look at other metals, industrial metals like copper, fell on the speech on the threat to attack Iran's civilian infrastructure, in particular, if the talks fail. There was a line that he said that he was going to hit Iran extremely hard in the coming weeks and bring them back to the Stone Ages where they belong. And then you've also seen the impact on aluminium, down as well, but we should note that it closed at its highest in 4 years yesterday because of that strike on the Emirates Global Aluminium and them saying that the missiles from Iran had forced one of its smelters to stop output.
Yeah, so a lot of focus on the scarring, beyond the human toll, obviously, in people's minds, but beyond that, the economic scarring to all kinds of infrastructure in the region. Let's talk about what's happening on trade. Something else to think about, because in case you hadn't noticed, it's the 2nd of April. Where were we 2nd of April last year? We were right here talking about Liberation Day, as it was dubbed by the president, and talking about the impact of that on global trade. So we have a reminder of this story, and it hasn't fully gone away. We've been waiting for the results of a Section 232 investigation into the pharmaceuticals industry, and now we are reporting, lots of places reporting, that we could get, as soon as today, pharmaceutical companies being hit with a 100% tariff. Crucially, there are lots of companies that have already done deals and countries that have done deals with President Trump, which means they'd be excluded. But it is a nice reminder of, how far we've travelled and also how far we have not travelled since April the 2nd, 2025.
So 100 to 200% on pharma. Also, the Trump administration reportedly preparing to outline a tiered system for steel and aluminium tariffs to try to simplify the current system. So we could get an announcement again on that as soon as today. And the Journal reporting that that could be a 25% levy on finished goods that are made with imported steel and aluminium. But as we reflect on the economic impact of tariffs so far, we have a great piece about this on the Terminal. And that deep blow to growth that many had feared hasn't really materialised. You have seen global trade holding up, and because of the trade deals struck around the globe, that's softened the blow. Yeah, absolutely. Many reasons why the blow has not been as tough as we thought it might have been. Plenty of carve-outs, some doubling down, some taco in there as well. But if we look at the effective, and we just had a chart up, actually, of the effective tariff rate,
on imports into the United States, you can look at it two ways. You can say it's 4 times what it was before Liberation Day, so that is clearly going to be negative for global trade. But on the other hand, it's well off its highs that it was a year ago. So, you know, there are different lenses you can apply to looking at that tariff story. We'll continue to revisit that as we go through the programme. Let us tell you some of the other guest conversations we have coming up this morning. We will talk about FX. The dollar is gaining, as you would expect, because we are risk off this morning. Alex Jekov will be with us, BNP Paribas Markets 360, G10 FX strategy head for Europe. I've seen some interesting calls on the yen and the pound in the context of the risk-off story around Iran. Frederic Carrier will be with us, RBC Wealth Management Investment Strategy UK and Asia head. And we will also find time to talk about the travel industry. This, of course, an industry that has been hugely disrupted by what is taking place in the Middle East. Irene Hayes joins us. Hayes Travel, really big tour operator here in the UK. What is the perspective on the ground about where people are and are not flying?
Let's take a look at what else we're watching throughout the day. At 10 a.m. London time, we have Italian retail sales data. We have the French President Emmanuel Macron visiting South Korea. He's expected to arrive at 10:30 a.m. London time. At 1:30 p.m, we have US jobless claims data. At 2 p.m, Tesla sales numbers. That's in the US pre-market. And later on, we'll be hearing from the Fed's Laurie Logan.
OK, so those are the things on the agenda. Let's get an update on the other stories that we're focused on this morning. A bit of corporate news for you. Bloomberg understands that the beauty giants Estee Lauder and Puig are advancing talks to combine. Sources say the deal to bring together the two family-owned companies would be mostly stock, with a formal announcement possible within weeks. The tie-up would create one of the world's largest luxury beauty companies and pose a significant challenge and pressure on Keir Starmer, the Prime Minister, to step in to help motorists. Yesterday, Starmer acknowledged the rising cost of energy, but stopped short of announcing any major new support. And NASA's Artemis 2 mission has launched to space and reached a stable orbit, kicking off a landmark journey that will take the crew of astronauts closer to the lunar surface than anyone has been in more than 50 years. The rocket system, taller than the Statue of Liberty, reached speeds of more than 17,000 miles per hour as it hurtled into space. The crew will spend roughly 4 days travelling to the lunar vicinity, where they will swing behind the moon's far side. They are slated to perform a flyby of the lunar surface on April the 6th, so out of communications for a period of the flight, just as they were decades ago in similar test flights. So certainly something we'll continue to monitor, Lizzie.
Well, coming up on the opening trade, the challenges are mounting for the global aviation sector, with soaring jet fuel prices, airspace closures and widespread flight cancellations. We will discuss the outlook as the Iran war drags on. Plus, we'll look at the stocks to watch at the open, including Novo Nordisk. This after Eli Lilly's weight loss pill wins US approval, ratcheting up pressure in the battle to lead the obesity drug market. But up next, we'll be joined by Willem Sells, Global CIO at HSBC Private Banks. If you've got any questions of your own for any of our guests, please do send them in to us on IB+BB TV Go. Good morning from London. This is Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the days. top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslam. Amin, only on Bloomberg.
Bringing you up to the geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics, and geopolitics. For sophisticated conversation, this is Bloomberg Surveillance.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Matei.
And I'm Christina Raffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some
Of course, now they're going to have competitors. We got a big week coming up in politics.
earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. Is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insight. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline, bad news, is bad news.
This stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions.
It's not just what's happening present day. 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
When this conflict is over, the strait will open up naturally. It'll just open up naturally. They're going to want to be able to sell oil because that's all they have to try and rebuild. It will resume the flowing, and the gas prices will rapidly come back down. Stock prices will rapidly go back. Up. They haven't come down very much, frankly.
President Trump used his primetime address on the Iran war to say the conflict is very close to completion, but he also warned the U.S. Plans to launch fresh attacks within the next 2 to 3 weeks. It is on that latter line that the market seems focused. Let's bring in Bloomberg's Washington Deputy Bureau Chief Laura Davison, who is able to take us through the key takeaways, Laura, then, from what we heard from the President. Good morning. What were your thoughts?
Much to the market's dismay, there wasn't a lot of new information in this speech. This was largely a rehash of things that he has said previously. There was a lot of optimism that there may be additional clarity in this address, calling, all the TV networks and everyone together for this primetime speech to lay out, what those next 2 to 3 weeks look like. Instead, he kind of even backed away of some prior comments where he had indicated that the war would end in 2 to 3 weeks. Now he's just promising fresh attacks. He says talks are ongoing, but it's unclear exactly what those look like, and really didn't give any of the indications that people were hoping to see. One thing was clear, however, is that the Strait of Hormuz and what happens to it, how to open it up, is something that he is leaving completely to allies. He sort of lambasted European and Asian allies, saying that they needed to buck up and get some courage and take over that strait because it wasn't the U.S.'s problem anymore. So that's why we're seeing a meeting today happen. Keir Starmer's gathering 35 leaders from around the world to talk about that next step. But this is, something, at least an objective that, was a priority for Trump just a couple weeks ago that he's now completely abandoned.
So what are the main unknowns that we are waiting for clarity on now? Because there's been so much mixed messaging since the war broke out.
Yeah, we still didn't get any additional clarity about, what sort of talks he is willing to pursue with Iran, who the administration is talking to. They have, continued to maintain that they're having direct and indirect talks with top Iranian officials, and the officials at Iran have continued to deny that. There's also not any clarity about, if there will be, beyond those 2 to 3 weeks, an escalation in military might. There are still U.S. troops in the region, and, kind of what Trump's overall plan here, and if he, is he going to war here in just a couple weeks, or is this going to be a long-term, protracted fight? All of that remains unclear, adding to the uncertainty that we're really seeing play out in the markets today.
Okay. Laura, thank you very much for the update. That's Bloomberg's Laura Davison. Now, rather than reassuring markets that he could bring an end to this war swiftly, some of President Trump's remarks appeared to have rattled investors. Joining us now to discuss is Willem Sells, Global CIO at HSBC Private Bank and Premier Wealth. Good to have you with us this morning, Willem. I wonder how risky President Trump's escalate to de-escalate rhetoric is, this strategy, if you want to call it that, for markets. Are markets bearish enough at this point? How are you bracing for the next 2 to 3 weeks or more of this war?
So it's very difficult for investors to trade this, right? You have ups and downs, maybe even during the day, but certainly from one day to another, we don't, if there is further escalation, then obviously the fear of the market will be, number one, do we have further harm to production facilities and refineries? But more importantly, when are we going to open the Strait of Hormuz? So it is that transportation, that flow that is important. My understanding is that if you want actually a convoy, you will need quite a broad coalition from that London meeting, especially if the US is not participating. So that is what the market finds difficult. So everything remains about oil and energy prices and gas prices. So that has an impact on the producers versus the consumers. So a lot of Asian countries, being hurt by that. Europe underperforming versus the US dollar strengthening on the back of that. And so therefore, sort of that diversification that we saw over the last, number of months away from the US dollar, that being stalled. That then has an impact on the treasury market, and together with the US dollar being strong, obviously holds gold back. But I think the sell-off in gold is probably done.
Okay, that's interesting because gold obviously hasn't been the best performing hedge throughout all of this. When does the turnaround, what prompts that turnaround that makes you say it's done?
We work a lot with scenarios for our clients, right? So, a solution to the war, a reopening of the Strait of Hormuz being the positive scenario, that then obviously brings down the US dollar, and you get, again, that diversification, that demand for gold coming back. So the positive scenario for the world is positive for gold as well. The worst scenario where it all continues to, the Strait of Hormuz continues to be closed, that is a negative for gold. Why? Because you get continued pressure on treasury yields and on an upside on the US dollar. So maybe a little bit further downside in that scenario, but ultimately there is support. So in most of the scenarios work well for clients because they do stress test of their portfolio and they kind of sense whether they're comfortable under different regimes. Clearly, we use our quantitative strategies on that as well, our quantitative models, to give them that comfort. But most of them are looking for diversification and are not panicking at this point.
Okay, not panicking. Are you panicking about volatility in bond markets, Willem? Give us some context around the amount of volatility we see. It passes almost unmentioned that we see, the scale of the moves that we're seeing right now, because it seems to be almost daily. We've got US Treasury yields, 10-year, 6 basis points higher today. I'm just looking at the start of the European trading day, and we're up by 9 basis points over on the Italian BTP, 7 in France. We're back to worrying about inflation once again. This is a fast-moving agenda for the bond world.
Yes, I do think that you have two-way volatility in the bond market as well, and that then obviously leads to opportunities for those people who are not panicking but want to tactically, use those opportunities. So obviously structured product being, one of those areas for private banks. From a bond market perspective, I do think that you are starting to see more of a two-way move on the back of, number one, inflation concerns, but then how is that going to impact growth, and do we have a flight to quality as well? So you're starting to have more of a balance, I think, between those two. Clearly, the Japanese auction was one of the elements, today, also the oil price move. But I do think that, people, they tend to, however, shorten their duration. Most of our clients were already somewhat short in terms of duration, so that's a bit of a trade. They obviously are also in quality in the credit space.
Yeah.
Although you must say that, from an emerging market perspective or from a credit perspective, the widening of credit spread has been relatively orderly, and that gives us some confidence as well.
You mentioned mentioned emerging markets there. Just wanted to focus in on some of the changes you've made to your strategy as a result of all of this. And one of the things is downgrading Indian bonds, equities and the currency. There's been a lot of euphoria around India. So is this just part of dialing back exposure to areas that have done really well in recent years?
It's areas that have done really well, but also the ones that are sensitive to oil and energy prices generally.
So could suffer terms of trade.
So within Asia, clearly the more vulnerable in terms of oil prices are Thailand, Indonesia, South Korea, and Taiwan. Now, from a longer-term perspective, we do think that South Korea and Taiwan have that upside from an AI perspective, exports as well to the rest of the world, and that's a longer-term trend that continues to be there. So I think the sell-off in those countries was kind of a little bit of profit-taking, as you were saying, because those markets had done very well. But so they have that upside, those two markets, whereas in India and in Indonesia, I think, have less upside, for the rest of the year and are currently vulnerable to those oil imports.
Does the AI story give you fundamental faith in the US economy and its resilience?
I do think so. And especially if you are thinking about a world, once this conflict is solved, a world where we will have somewhat higher inflation than a central bank's policy stance, but not necessarily interest rate tightening. Plus, you have economic growth that is kind of lackluster. What you then want is quality earnings. And clearly, technology, obviously the profitable technology companies are a good place to be, given the weight of that sector in the US. That is an area, where we think, one of the reasons why we continue to be overweight on the US, which is, I think, which certainly was out of consensus, but with the conflict, maybe somewhat less consensus.
Yeah. Willem, I see a lot of references to fog recently, the fog of war and therefore the fog of investment, really, the difficulty with having conviction. We've seen the Fed be very open about the fact they don't have a huge amount of conviction about where things go from here. Can we have any framework for understanding where the Fed goes and how much that's going to matter and cut through to markets?
So relative to other central banks, obviously the Fed has the dual mandate. So therefore we do think that there is, in a bad scenario around the conflict where it continues, I think the ECB or the Bank of England are much more likely to hike interest rates than the Fed would do. Because the European banks, central banks, kind of more look more at the inflation side, whereas the Fed has the dual mandate as well, looking at growth. So they will have a negative impact on growth, and therefore, we think that the Fed will be stable. Now, that is one of the saving graces for the emerging markets, to make it not too bad for the emerging markets risk appetite. And I think that is one of the reasons why, indeed, that credit market, emerging market credit, has continued to be reasonably benign, because the core view is still that the Fed won't hike.
But very briefly, I mean, you've turned cautious on consumers. How fast do higher energy costs start to bite into demand and even earnings?
Already, right? They already see the impact on inflation. Now, one thing compared to 22, because there is lots of people comparing to the 70s and then 22 being closer. We have not yet, the gas price spike for the moment is smaller than 22. We don't yet have a food price spike, yet we have inflation pressure. But the negative for the consumer is that the labor market is weaker than in 2022. So it won't necessarily feed through into a big inflation spike, but the consumer, nevertheless, is stretched.
Yes, and the unemployment point, crucial one. Willem, thank you very much. Thank you for your time. Willem Sells, Global CIO at HSBC Private Bank and Premier Wealth. Coming up, we will continue to focus on the market's response to President Trump's speech. The dollar edging higher this morning as President Trump says the US will hit Iran extremely hard. We will talk to Alex Yekov, head of G10 FX Strategy Europe at BNP Paribas Markets 360. This is Bloomberg.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
This is a 15, 16 grams tuna. Then sushi rice is still a little bit warm. So take one, like a very, don't make it too tight. So from now, and very light, like a ball. Put wasabi in the middle. Then my process 1 to 6. 1. This is putting the between the rice air. Then make the 4 fingers curl. Make sushi shape. Then touch this. 2. Then turn. Now these 2 fingers, top to the bottom, make the sushi shape more beautiful. 3. Then, I'm not, looks like pushing, not pushing. 3, 4, turn, same way, 5, and 6. So this is the 1 to 6.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujita report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Bringing you up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anna-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Welcome back. 30 minutes from the start of the cash equity trading session for stocks and the final trading day of the week, of course, Thursday, 2nd of April. So this is the futures picture. We are expecting to see substantial retreat in risk appetite at the start of the trading day today. So Euro Stoxx 50 futures down by just shy of 2%. All of this, of course, coming off the back of President Trump's speech that he gave some hours ago now. And the market has taken a negative reading of what he had to say, not adding a huge amount new, Lizzie, but certainly emphasis on the escalation, the re-escalation potential within the next 2 to 3 weeks.
Yeah, we're seeing that risk-off flavour in the bond space as well. Yields climbing higher across the continent, across the European curve, and following moves in treasuries. So the 2-year Treasury yield is up 5 basis points. But I should say that this is more at the front end here in Europe. So Spanish and Italian bond yields are up at the front end by 9 basis points for BTPs and 8 in Spain.
Let me just detour slightly to talk about what's going on in Switzerland, because we are hyper alert to anything to do with inflation right now, because we have expectations of rising inflation. The market expected inflation in Switzerland to take a tick up. And in fact, the market expected it to be higher than it has come in. So that's perhaps worth noting, because Euro Swissy is on the move as a result. So the March consumer prices number for month on month up 0.2%, and the expectation was for a rise of 0.5%. And similarly, the year-on-year number is up by 0.3%, and we'd expected 0.5% higher. So we will continue to watch this, and we're going to have a conversation about FX markets shortly. So perhaps this will be something that we will focus in on in a moment. Lizzie, let's talk for the time being about some of the developments in the Middle East.
Yeah, let's turn back to the geopolitics. US allies preparing a diplomatic push to reopen the Strait of Hormuz while weighing sanctions if Iran keeps the key waterway closed. British Foreign Secretary Yvette Cooper will chair a virtual meeting today with counterparts from some 35 countries. And Paul Wallace, our managing editor for the Middle East and Africa, joins us now around the desk. Paul, just talk us through what we know about this meeting.
So this is going to be a virtual meeting chaired by Yvette Cooper, the UK Foreign Secretary. It's got 35 countries there. Most of them are European countries, a couple of Gulf states, the UAE and Bahrain. Essentially, they're going to try and figure out what to do about Hormuz and how to reopen it, especially if Trump does follow through on some of the things he signaled about walking away from, moving exiting the U.S., as it were, even if Hormuz is still shut. Telling the U.S. is not part of this group of 35. So, in a sense, they are there to just try and find out how to get it reopened. They don't want to use force. That's sort of going to be the last option on the table. They're going to try the diplomatic route first and try some pressure tactics on Iran, such as even deeper sanctions. Important to note that Iran is already heavily sanctioned already, so that route may not work so well.
Yeah, you wonder if any of this is realistic in a conflict like this.
Yeah, so economic pressure on Iran, it's hard to see that causing the Iranian leadership to budge much. But there are plenty of countries within that group of 35 that have quite deep sort of diplomatic relations with Iran, and the hope is that at least some of them can get through to Iran's leaders and make sure that whatever happens, Hormuz is reopened and safe for commercial vessels.
Yes, and President Trump has been quite ambiguous on what he wants to see happen with the Strait of Hormuz, constructively or otherwise. What about what we heard from Iran yesterday? Because before President Trump spoke, we saw this quite astonishing letter, really, from the Iranian president to the American people. So trying to, in the words of Iran, cut through the rhetoric and look beyond the political rhetoric. What were the things that stood out to you in that letter?
From that letter, well, I mean, the fact that they wrote it and published it in English, in long form, and all those sorts of things, that's sort of significant in itself. This is not something Iran does much. It came a few hours before Trump's speech, and it really was trying to be some kind of message to the American people, I think, to do another effort by Iran to, get the Americans against this war, to up pressure on Trump to end it. Whether or not it's gained any traction, it's hard to tell at this stage. There hasn't really been any kind of significant reaction from American politicians or anything like that. But I think it does show that for all Iran's belligerence and rhetoric, that it can keep going for much longer in this war. It does want this to end. It is, day by day being exhausted by all these attacks and all these counterstrikes that it itself is making against Israel and Arab Gulf states.
Yes, and it seemed as if during the session yesterday, it was interpreted as something that maybe was designed to take the tension out of the situation a little bit. We don't know if that will be successful, but that was maybe the aim, and then go some way to explain why markets were then wrong-footed overnight by what we heard from President Trump, because they'd expected, or they'd been poised for something a little different. Thank you very much, Paul. Thanks for joining us. Paul Wallace, our managing editor for the Middle East and Africa. Thinking of the market's response then yesterday and President Trump's speech overnight, European hours, the dollar is edging higher after President Trump said that the US will hit Iran extremely hard over the next 2 to 3 weeks. Alex Yakov, head of G10 FX strategy Europe at BNP Paribas Markets 360, joins us now. Alex, good morning to you. So, what stops the dollar in this current environment where we have so much headline risk, and just like we saw overnight, escalation can happen pretty quickly?
Good morning, and thanks for having me on again. We think very little stops the dollar now from appreciating. Our work's shown that the dollar's actually not reacted enough to the energy price shock that we've seen. So if you compare it to past supply-related energy shocks, the dollar's only reacted with about a 50% beta. So why is that? It's basically the front-end rates repricing in energy-sensitive countries have insulated these currencies like euro and sterling. Another way of saying this is the market's been trading inflation. We think going forward, the market will pivot to trading growth, and growth is dollar positive.
So the fact that we've had expectations of rate hikes from some places because the inflation challenges they will face on imported energy, that means that the dollar, that we haven't seen so much negativity in those currencies and so not so much positivity in the dollar then?
Exactly.
Yeah, so that's the argument. And so I saw somebody this morning suggesting that the pound is the poster child for dollar strength. Where does that take us? Do you agree? Is that where you're watching?
I think it is, and it's actually where this phenomenon that we talk about is most pronounced, because sterling's been one of the least bad performing currencies since the start of the war, which is confusing and we think should correct itself for a few reasons. One is that the energy channel is quite strong in the UK. The UK is sensitive not only to higher oil prices, but also to higher gas prices. And secondly, one thing that sterling has, maybe even more so than euro, for example, is fiscal risk. So as yields rise, sterling should be more sensitive to the back end of the curve than the euro. Now, the market's already built shorts in the pound, but those shorts are not extreme, and so our view is that cable has further room to fall.
OK, so the pound particularly vulnerable. What about the euro? Because you see 75 basis points of hikes, if I'm right, from the ECB between June and September, but you're not convinced that they'll benefit the euro particularly. Does it come back to this story you're telling about the dollar, that that relationship is kind of broken?
Exactly. So typically rate hikes are positive for the currency through the rates channel, but sometimes, especially during energy crises like this, the growth channel dominates. And so we don't think the 75 basis points or so of ECB hikes that could come are likely to prove euro positive. I think you can almost make a case that they'll be euro negative if it comes at a time when growth data is also turning in the eurozone. The ECB are in a difficult position insofar as they want to prevent inflation expectations from de-anchoring or rising. So they want to prevent rises like in 2022. And so they'll try and get ahead of the curve by hiking preemptively. But that's not to say it can feed through to a stronger euro.
OK, one of the potential winners that you flag, though, is the Aussie dollar. And indeed, it has been more resilient compared to Liberation Day or post-Liberation Day last year. But if this is a protracted conflict, and there's no signs from President Trump's speech, really, that it won't be, and you have global growth souring and the data turn, and they're already starting to turn for Australia, how much pressure could the currency come under?
So we already had a positive view on the Australian dollar going into this crisis. The RBA was hiking. There was a good flow story. If anything, Aussie is a relative winner rather than an absolute winner, if you will. So Australia is a net energy exporter at the margin, and the RBA is likely to tighten, if you will, for good reasons, or was already tightening for good reasons, not bad reasons, as is the case in Europe. And so we think the Australian dollar has more room to go. One caveat is that you need equities to hold up. So you can have gradual declines in equity prices and the Australian dollar do well. You cannot have sharp sell-offs, 10% plus in equities, and the Australian dollar hold up.
Can I ask you about the role of the Swiss franc right now? We just got that CPI data out of Switzerland, and we're primed for signs of higher inflation, of course, because of what's happening in the Persian Gulf. But the inflation didn't come in as high as we expected. So the survey for the year-on-year and month-on-month was 0.5% higher. And in fact, we got 0.2% or 0.3% on the year-on-year figure. I mean, do we make much of that miss, if that's the right word for it, on inflation? What do we think? I mean, the questions around the Swiss National Bank had all been about whether they were going to have to go back into negative territory again, and the haven status of the currency. How are you approaching the Swiss franc?
So let me touch on the haven status point there, Anna, because yen stopped being a reliable safe haven a while ago. Gold is obviously not a reliable safe haven, so Swiss was sort of the last thing left for markets. And now even Swiss isn't performing in this latest bout of risk-off and higher geopolitical risk. We think ultimately it will. The dovish S&B is now priced after the meeting, and we've had a decent repricing in Euro-Swiss higher. It is one of the few places that the market can still hide in the geopolitical risk-off, and we would argue that local factors become less important in times like this for Swiss than global factors. So ultimately, we would be minded to say the move higher in Euro-Swiss looks overdone.
And let's talk about the yen then, because if oil prices get towards $150 a barrel, as some are expecting, we're only at 108 only on Brent today, how much further could the yen slide? Because you've got Japanese officials ramping up the intervention rhetoric. UBS flagging dollar yen could reach 175.
So for dollar yen, we've had a view that the energy crisis is bullish. In other words, that higher energy prices will filter through to the yen, again, via the growth channel, rather than that yen will be a reliable risk-off hedge. And that view has proved, at least so far, correct as we've ground towards 160. I think if we continue to see higher oil prices, then so too will dollar yen grind higher. But again, a bit like what I was saying earlier on the Australian dollar, it depends on how far the sell-off in equities goes. If you get a very sharp, deep sell-off in US equities, it's going to be difficult for dollar yen to sustain the grind higher. The BRJ here also become an important element. We think they can hike in April. That should be all else equal positive for the currency, but maybe to some extent it's even linked to the currency where they're more likely to hike as dollar yen goes higher now.
Alex, can I take us back to where we started the conversation, which was on the dollar? Because you were clear, you don't think much stops the dollar in the short term. Things look poised for more dollar strength. We see dollar strength this morning up by 0.4% on the dollar index and Bloomberg dollar index. If we take a longer term look, though, how do you think we think about the de-dollarization narrative and the threats to the dollar dominance from the yuan, the euro, or from wherever? How do we think of that in the context of what we're seeing in the Middle East? Is it too soon to say? Can we draw any conclusions?
I think it's too soon to say. So throughout last year, we had a view that the flow story was negative for the dollar, driven by higher European investor hedge ratios. This year, that story is, of course, less prominent. I think one really important angle to watch when the war ends is how European equities perform relative to US equities, because this is an important determinant when it comes to Eurozone investor flows. So if we start to see European equities outperform again, then potentially we can see a more negative dollar flow story. I think for now it's too soon to draw conclusions, and definitely too soon for the market to trade this as a theme.
And how much does it matter what the Fed does? Are you expecting it to be more likely that Trump gets his cut this year than not?
So the Fed are arguably in a better spot than the ECB or the BOE. They have the luxury of being able to wait because the inflation feed-through is less strong, or at least the impact on inflation is less strong of higher energy prices. So if tomorrow we print well in payroll, so we expect 70K and unemployment at 4.4, then they can move to a symmetrical reaction function in April, which means same chance of, or an equal chance of a hike as a cut. But I don't think you necessarily need the rates channel for the dollar to strengthen. So you don't need the Fed to turn more hawkish in order for the dollar to go up. You can just have energy prices at current levels filter through to growth in a negative way, and that drives a stronger dollar.
Well, thoughts with everybody covering that tomorrow. Alex, good to have you with us around the desk. Alex Yakov, head of G10 FX Strategy Europe at BNP Paribas Markets 360. Well, the war in Iran has left Fed policymakers with tough decisions, as we've been discussing, as concerns grow over inflation and the global energy shock.
Policy is well positioned to address risks to both dual mandate objectives, and I expect the current setting of the policy rate will remain appropriate for some time. However, I will support adjustments in the stance of policy if the evidence indicates the economy requires them.
That was Alberto Musalem, president of the St. Louis Federal Reserve, and we'll be discussing more on the challenges ahead for central banks next. This is Bloomberg.
Tariffs, I think, are probably the first time in my career I've had to deal with like a fundamental change in government policy in terms of how we think about how markets work.
The challenge, especially within my supply chain, is now how do you have enough productivity initiatives to offset the increased cost of all the product?
Can you just move your supply chain out of China and into the US, or out of Mexico and up to Canada? Is it that easy?
It's not that easy, but we do have flexibility. And we had been, prior to tariffs, prior to any of this, we had been on a journey to diversify our footprint out of China. So probably 2-ish years ago, roughly 65% of our toy and game volume was coming from China. Today, as we entered into 2025, that was around 50%. All we've done is really accelerate the path to get down to roughly, call it 30% by the time we enter into 2027. For us, I mean, if tariffs stay, if tariffs go, it's never good to have so much of your manufacturing base centered on one geography. We think the diversification is good, but it does take a bit of time to get vendors and suppliers up to speed. Quality is a big deal, especially when you're dealing with toys and kids. It's not an instantaneous thing, but it's not also a 5-year, have to build a new plant from scratch.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything. U.S. jobs numbers are released. Bloomberg has the report under surveillance with crucial data and expert analysis at terminal speed. Nobody covers jobs day like Bloomberg.
Welcome back, everybody. The opening trade is 12 minutes away. The cash opening trade, that is, of course, for European stocks. And we are expecting a very negative session. Yesterday was really strong, and that's part of the backstory here. Let's turn to markets in 3 minutes with Adam Linton from the Bloomberg Markets Live blog. Adam, good to see you. So give us your perspective on this sort of up again, down again market environment that we're in. Yesterday, we were talking about how there was going to be quite a lot of short covering, and that's why we bounced so hard. Markets were positioned for something de-escalatory. We didn't get it, and now we expect a drop at the start of trade.
Yeah, I think the main thing to say is this market's just been pulled in such extreme directions all the time. You know, yesterday we thought we were pricing out the tail risk of materially higher energy prices. That's why we saw that extreme bounce. Also a bit of positioning at play helping there. And then today we've now had a re-escalation. So we're kind of stuck in this kind of de-escalation versus escalation ping pong. And I think the market is just getting increasingly fatigued by that. And I think ultimately there's an increased burden of proof now for de-escalation. I think we need to kind of see actual actions and material breakthroughs. And until then, I think the market's probably going to stick to the broad playbook that we've seen throughout the conflict, which is sell stocks, sell bonds, buy the dollar and buy oil. I think, you know, even if you do see some positive headlines today, I don't think they'll have too much cut through into the tape. We're heading into a long weekend, a lot of headline risk on that front. And therefore, I think, you know, today's moves probably will stick.
So it's like taco just gets less and less effective the longer this goes on. When you look at the bond space, yields are up across the European curve. Is it that markets are worrying about inflation again and we're more likely to have ECB hikes?
Yeah, I think, you know, definitely the inflation angst has reasserted itself back on markets. You know, yesterday we did see some of this price action in the fixed income space, but it was relatively muted. We saw a bit of a fading of some of the hike expectations when things did look a little bit better. But ultimately for markets, it's a case of trying to figure out where is this landing zone for energy prices, how protracted is the crisis going to be. And, you know, we saw yesterday remarks from ECB officials that we may already be in the ECB's adverse scenario. And, you know, when it came to increasingly pricing rate hikes, ECB officials wanted sufficient information in order to get there. But, you know, if things do become more positive, that kind of cuts both ways. The ECB are going to need to have sufficient information in order to be able to declare the all clear. And I think until we kind of get increased visibility, markets are going to keep pricing rate hikes from the ECB and the Bank of England. I think the Bank of England was incredibly telling. You saw Bailey come out yesterday and say markets are wrong to be pricing Bank of England hike rates. Well, ultimately, the market just shrugged at that because it's really struggling to kind of deal with this reaction function. And even if you don't think, you know, the Bank of England are going to hike, this inflation risk means that markets will continue to price that risk.
Yes, and some people pricing in hikes and then quickly cuts for different geographies. Let me ask you about non-farm payrolls. It's going to drop into a market that's basically closed. What are we going to do with this information about jobs and the extent to which they were created in the month of March in the US?
Yeah, I mean, it depends on where you are. You'll either pick that report up Monday or Tuesday, and then between then, you obviously got a lot of headline risk from Iran, so we don't necessarily know exactly what the lie of the land will be. I think if you're an equities trader, I think it's hard to call is good news or is good news bad news, vice versa. And for rates markets, we saw solid data, you know, lead to higher rates. But if in an adverse scenario, is that, you know, good data going to have a positive story? Probably not.
Adam Linton from our Bloomberg Markets Live team, thank you very much. And remember, you can get up-to-date analysis and insight from Adam and the team by going to MLIV Go on your terminal. Well, 7 minutes away from the cash open here in Europe, we have Euro Stoxx 50 futures down 2%. Let's look at which stocks are likely to be on the move with Bloomberg's Chloe Melly. Chloe.
Good morning, Lizzie. Novo Nordisk is very much in focus today after its biggest rival, Eli Lilly, won US approval for its weight loss pill. And so this now creates greater competition for Novo, which just launched its own weight loss pill earlier this year. So as we can see here on the chart, we've seen the performance between the two companies really go into two different directions starting from last summer. And so this is a period during which Novo saw a lot of different headwinds, including trial setbacks and some management upheaval as well. And so the news on this US approval for Eli Lilly is potentially likely to widen that performance gap even further. Moving on to some M&A, and we have got Estée Lauder and Puig said to be in advanced talks, and so this potential deal would create one of the biggest players in the luxury beauty sector, really create a challenger for L'Oreal, which is currently the biggest player in that industry. And this is a deal that also comes at a time when, you know, we've got concerns about supply chain, around inflation, around consumer sentiment, and so those companies are really trying to find scale. And so we'll be watching out at the open for any market reaction there. And finally, Lufthansa is also in focus today. We saw the shares really rallying yesterday because of this optimism around the potential end to the war in Iran. But then today we have Morgan Stanley cutting the price target for Lufthansa, saying that there's continued risk of fuel costs staying higher for longer. And we have a separate note as well from Bloomberg Intelligence saying that those fuel hedges do not guarantee product delivery. And so those carriers are really vulnerable to those supply shocks. So we could see Lufthansa moving lower this morning.
Chloe, thank you very much. Chloe Melly with the movers. And on the subject of aviation, we just getting a headline on the Bloomberg terminal says Air France KLM has submitted a non-binding offer for a stake in TAP, in TAP, referred to as both things, at the Portuguese airline. And I spoke, Lizzie, to the finance minister of Portugal, who said even with everything that's going on in the world and the trouble that aviation is in, he was confident there would be bids, and there may still be more bids. OK, well, 5 minutes away from the open, we are negative on European futures. Euro Stoxx 50 futures down 1.8%, less bad for London as we see oil prices climbing. Stay with us, this is Bloomberg.
Get your fixed income fix. Watch Bloomberg Real Yield around the world right here on Bloomberg. Context changes everything.
Astonishing day for US technology.
It's shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg. From the world of politics to the world of business, Joe Matthew and Kaylee Lines deliver news, insight, and analysis live 2 times a day, every trading day. Balance of Power at 1 and 5 Eastern, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
Bringing you up-to-the-minute political news whenever and wherever it happens. I'm Tyler Kendall in Washington, and this is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gurr.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up. Sorry.
Welcome back, everybody. This is the opening trade. A few minutes to go then until cash equities get started for Europe for Thursday. Feels like a Friday, but it is a Thursday, and the market sentiment maybe doesn't have a very much of a Friday feel. Let's have a look at the setup then going into today. This is a bit backward looking because this is the US session of yesterday, but I think it's still instructive of the volatility and the changing news lines, the headline risk that we suffer in markets right now. This was the optimism at the start of the trading day in the US yesterday. This is where Europe closed. That optimism continued, was challenged and then reinstated later in the session as the market positioned itself for something that seemed as if it was going to be quite positive, maybe de-escalatory from President Trump when he spoke overnight. We got to President Trump's speech and it was not de-escalatory, emphasis on the attacks that could take place in the next 2 to 3 weeks. And so the markets are caught in a negative reaction function today. So we see Euro Stoxx 50 futures, Lizzie, down by 1.8%. Perhaps the FTSE is a little cushioned, but we are expecting negativity wholesale across these markets today.
Well, let's take a look under the hood. Some of the stocks we're watching this morning include Novo Nordisk, likely under pressure after Eli Lilly's weight loss pill won US approval. Novo, of course, launched its own obesity pill earlier on this year, and indeed Novo Nordisk's ADRs have been down as much as 2.5%. So we watch them at the European Open. Also watching Puig, Estee Lauder and Spain's Puig advancing in talks to combine, this according to sources, and the respective owners, there are the respective owners of Mac and Lalabo, so we'll watch that one carefully. Also, finally, Lufthansa. Airlines in general under pressure from higher oil and jet fuel prices, particularly after President Trump's speech. You would expect that to factor in. But indeed, Lufthansa downgraded at Morgan Stanley for precisely this reason, Anna.
Yeah, absolutely. A lot of focus on aviation then because of the broader story around oil and Iran. We've also got a bidding battle taking place, or maybe it will be a bid battle, certainly bids coming in for TAP over in Portugal. So the start of the equity trading session is expected to be negative. We're factoring in further risk of escalation in the Gulf. No new news lines surrounding the Strait of Hormuz. No new developments as far as reopening the Strait of Hormuz and trying to normalise energy markets. As a result of that, the oil price is higher. Stocks are lower. We're certainly seeing that the case this morning here in Europe, and US futures continue to point substantially lower. So the extent of the selling here in Europe, yes, the FTSE 100 is a little cushioned from it. That probably to do with energy stocks, but the FTSE is down still by 0.6%. The CAC 40 down by 1.3%. So overall, for these European equity markets, we're down by just over 1%. And we see the message from the Trump administration really oscillating day after day in terms of escalation and de-escalation. And the market's just sort of caught in its headlights, trying to disentangle all of the messaging and try and work out if any off-ramps are going to creep into sight. Lizzie, what do you see in the markets this morning?
Well, the FTSE 100, of course, will be boosted by energy. That is the best performing sector this morning. It's up 1.5%, but it's going to be dragged down by basic resources, and that's second to bottom of the sectoral basket, down 2.25%. Overall, you've got all but 3 sectors in negative territory this morning, reflecting that risk-off mood that you've flagged for us, Anna. Tech at the bottom of the basket, though, down 2.3%. Only energy, food, beverages and tobacco and personal consumer goods managing to eke out gains at the moment. But just recapping some of those stocks that we had flagged we should be watching, if we turn to the airline sector, if I can find it this morning, IAG is down 3%. Air France, despite submitting that non-binding offer for a stake in TAP, Air France shares down 4.6%. We're waiting for Lufthansa to open at the moment, and yeah, those are just some of those that are moving at the moment.
Yeah, absolutely. So delving deeper into the aviation sector seems sensible today when you've got oil prices up by 6.6%. 107.86 is where we trade on Brent. And sure, they can hedge, but usually that just smooths the edges of their exposure and the profile of energy prices rather than really, wholesale reducing the exposure. So broadly in markets there, nearly every sector in negative territory, just energy stocks, food, beverage and tobacco actually proving a little more resilient today, which in itself is quite interesting, something we'll get to in a moment. Let's speak to Frédéric Carrier, who is Head of Investment Strategy for UK and Asia at RBC Wealth Management, with us on set this Thursday morning. Frédéric, thank you for being with us. So, I mean, let's take stock of where we are. European equity markets down substantially today, more oscillation in our expectations of escalation, de-escalation, but also following a pattern that we see most weeks since the start of this war, where the beginning of the week is more optimistic than the end. So what do you make of today's moves then, Frédéric?
There's a lot of focus about what President Trump, what the US might or might not do, but really what we focus on is the damage to infrastructure. And we see, while there are many scenarios as to how the war might continue or evolve, there's very few scenarios in which there is a normalization of energy flows because of the infrastructure damage. When you have the CEO of the Kuwait Petroleum Company saying that even if hostilities end today, it's going to take up to 4 months to put production back to capacity, you can just imagine what might be the case in Iraq, a larger producer with an infrastructure which has been underinvested. So we think that we have a scenario very likely of higher oil prices for much longer than what the market might be thinking.
Yes, Frédéric, can I ask you about where are opportunities in this environment, if it's possible to find them, or relative opportunities? Defensives, often useful place to think about, defensive stocks, a useful place to think about in times like this. But have they been playing the role you would expect? I noticed food and beverage, tobacco up today. It's mostly driven by tobacco, it seems. But this is the kind of sector that you might expect to do OK in tough times. What are you expecting?
So we have seen utilities do particularly well. Perhaps they are seen as halo assets, so unlikely to be disrupted by AI. They also will benefit from higher energy costs, so that sort of defensive is working. With respect to defense stocks, we think that the Iran war have unveiled perhaps some concerns which weren't there before the war. So the fact that Iraq within the first week was able to destroy a US radar facility, that suggests that perhaps the US defense is not as advanced as we thought. Also, the economics of using very expensive air defense to shoot down very cheap drones. So the economic logic might be a little bit strained. So we've seen a derating of defensive stocks from 35 times forward earnings to 28 times. We don't think that they will go back there in a hurry. They should be trading at a higher valuation than in the past because there's more visibility. Countries will definitely increase their budget in defense, but we don't think we're going to see the euphoria about defense stocks as we've seen in the past.
But does that not just mean that you need to be more selective within defense stocks and turn from, tanks and ammo to
definitely a lot more selectivity? Yes.
Okay. Also, what counts as a diversifier when it comes to commodities? We've talked so much about oil, but everything's being driven by this same macro shock. So how do you pick?
We talk a lot about oil this month. In January, we talked a lot about gold. So we want commodities to play a role in our portfolios, but we want them to be very uncorrelated to macro events, uncorrelated to stocks and bonds. So we have a long-short strategy which looks at the broad commodities market, so freight and agriculture, power companies, industrial materials, and focus really on demand and supply dislocation, price misallocation, and that will give a ballast in the portfolio that just buying a long-only commodity will not give you.
You would think that everything is impacted, though, by the war, whether it's through fertilizer prices or aluminium prices. How do you find a commodity that isn't touched by that?
So they all are, but it's all about demand and supply dislocations.
Yeah. I can ask about equities with a longer-term horizon. I think with a one-year view, you're still constructive on stocks. talk us through that. How much of that is dependent on resolution of the current war, and also is it reliant on the AI theme, private credit, keep on rolling in a sort of benign or positive direction?
So the key factor is that we believe that it's very unlikely that there will be a U.S. recession. The U.S. is independent in terms of food and energy. 20% of our household incomes come from social security transfers, which are indexed to inflation. It's one of the highest proportion in history. So that makes for a very resilient economy. And of course, AI investments are very important. So if the US does not fall into a recession, we think that it's warrant to be constructive on a one-year view. Having said that, we know that in the past, when there's been a constraint on oil supplies from Middle East crisis, stock market have fallen on average by 16%. And when we've had growth scares, so instances where fears of recession start to be discounted in markets, but a recession does not materialize. In those episodes, the S&P 500 can fall between 14% and 19% over a period of 2 to 9 months. So that gives us a ballpark of the volatility we can expect over the next year.
I did want to ask you a question that I've been thinking of since we were last speaking to our FX guest earlier in the programme, and that is a result of the war that the dollar kind of loses purchase because more oil won't be traded in dollars because of this war?
So with respect to the US dollar, we think that the theme of an erosion of the US dollar will continue, but perhaps not to the same velocity as it had before the war. And certainly there are increasing number of transactions which are done outside of the US dollar.
Yes, because I suppose there's another view that maybe this show of force and show of power, this was what maybe the US administration might hope, that would help to support the dollar. Certainly in the short term, the dollar is well bid, isn't it? Yes. Let's talk about bond markets and what role they're playing at the moment, Frederic. We've got bond yields are going higher once again, another sell-off, and that's in keeping with the pattern of trading in other assets that we would expect this morning. What role do you expect bonds to play?
So you were asking about opportunities in this market, and whereas it's difficult to see opportunities at the moment in equities because the headline risk is so high, we do see opportunities in the rates market in particular, and gilts for us have shown this opportunity. We've increased duration. We believe that the market is very much focused on the inflation impact of the shock, but we think that the Bank of England will have to flip very quickly to the growth impact. We're not in a situation as we were in 2022. Monetary policy is already restrictive. There's already a sizable output gap which keeps on growing. And so we think that the Bank of England, again, will be constrained in terms of increasing interest rates. And we think that when market discounts 3 or 2.5 interest rate increases over the year, we think it's too much. So we've increased duration.
OK, well, 10-year gilt yields up 6 basis points this morning at 4.89. Frédéric Carrier, Head of Investment Strategy for UK and Asia at RBC Wealth Management. Thank you very much. Well, let's check in on the core six this morning. How are they holding up in this risk-off environment? Oh, we do seem to have gains for Novo Nordisk and Nestle. We had flagged that we should keep an eye on Novo Nordisk, given that Eli Lilly's obesity pill has won US approval, not under the pressure that we had been expecting, and despite the fact that ADRs had been down in the US for Novo. Also, Nestle eking out gains of 0.2%, but losses for LVMH, Rheinmetall, ASML and Schneider. Let's take a look at some of the other individual stocks on the move this morning with Bloomberg's Chloe Melly. Chloe.
Good morning, Lizzie. Well, we are seeing those oil majors that were down yesterday now up, now very much in the green. And that is because yesterday they were down because of this optimism that the war in Iran might end. But then yesterday's comments from Trump about hitting Iran extremely hard over the next 2 to 3 weeks, that has led the market to think that maybe the resolution to the conflict is not coming just yet. And therefore, we are seeing oil gain and those oil majors gaining this morning, with BP in particular up 3%. Part of the same story is, of course, airlines, which are all down this morning after being up yesterday because of those higher fuel costs. And then we have some individual stories within that industry as well. We've got Lufthansa being downgraded and having its price target cut by Morgan Stanley because of this concern that fuel costs could stay higher for longer. And then we also have Air France, which has just submitted a non-binding offer for a stake in Portuguese carrier TAP. And so this is essentially kicking off the race for that company. And we are seeing just overall that industry down in the red this morning. Miners are also down. We are seeing Anglo American, Glencore, Fresnillo, Rio Tinto all as well in the red. This is part of the same story, those comments from Trump. And finally, AkzoNobel, the paint maker, is also down after being downgraded by Goldman. And this is really part of that chemical sector that is really struggling with those higher input costs. And so we are seeing that downgrade really hit the stock this morning, down about 3.5% for that company.
Chloe, thank you. Bloomberg's Chloe Melly with those movers for you. Coming up on the programme, oil jumps then as President Trump's address dims hopes of a quick end to the Iran war. More on that next. This is Bloomberg.
From the beating heart of global finance, economics and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacroix, and this is The Pulse, every weekday only on Bloomberg.
It's a multi-trillion-dollar industry. We'll show you what's happening in ETFs like no one else. ETF IQ, only on Bloomberg.
Good morning. This is Bloomberg Surveillance.
Welcome back to the opening trade.
Watch Bloomberg 10.
This is the Asia trade.
This is Wall Street Week. Welcome to Balance of Power.
You're watching Bloomberg Deals. Welcome to Bloomberg This Weekend.
This is Bloomberg Television.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jumana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
We do see opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
The trading day is about to start.
And you're already looking for that edge.
The opening trade brings you everything you need to know as markets open across Europe.
I'm Guy Johnson.
I'm Anna Edwards.
And I'm Tom McKenzie.
This is your opening trade.
Only on Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujita report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg.
Join me each week on Wall Street Week for stories of capitalism from business, markets, economics, tech, and climate.
More than what you need to know, it's what you need to think about.
Welcome back to the opening trade. We're 15 minutes into today's session and it is risk off here in Europe. Stock 600 down 1.2% on the latest from President Trump. We had that 2 a.m. UK time address from the president, essentially saying that he's planning to escalate to de-escalate in this war in Iran. And so the mood in markets is one of negativity this Thursday, as we have been seeing throughout the conflict. Weeks starting more positive than they tend to have ended. But particular weakness this morning coming from the DAX in Frankfurt. I should note that Denmark is closed today. So, in fact, Novo Nordisk is not trading at the moment. But what is on the move is Puig, as we have had the news that Estee Lauder and Spain's Puig are advancing discussions to combine their businesses, a move that would create one of the world's largest luxury beauty players. For more, let's speak to our Bloomberg Deals reporter, Manuel Baigorri. Manuel, good morning. What more do we know about the deal?
Yes, Lizzie, more progress coming on this transaction as the companies are advancing on their negotiations. As we learned towards the end of last month, the companies were in talks to combine, potentially creating one of the biggest luxury beauty brands in the world. Estee Lauder, obviously almost 3 times the size of Puig, which has a market valuation of around $11 billion. And talks between the companies are definitely progressing in the right direction. Most likely this is going to be a stock transaction, which will allow the two families behind the companies to remain in very active position and have a say in the combined entity. So definitely a very transformative deal in the consumer retail space.
Yes, Manuel, talk to us about the wider industry, the wider sector, and how this changes the competitive landscape.
Anna, I mean, for a while we've seen a significant uptick in transactions in what had been actually over the years a rather sleepy sector for big transformative deals. We saw just a few days ago the Unilever McCormick more in the food space. That was also a very large transaction. Obviously now this into the beauty segment, and Puig, which, by the way, just until not that long ago was a relatively not very well known privately held Spanish company from the Northeast. Then they did the IPO, and now people kind of realize, well, this company is actually rather sizable. I mean, they are very big, particularly in the fragrances segment. This will obviously, combining with Estee Lauder, create a potential rather steep competitor against the likes of L'Oreal, and definitely a big transaction in this space. I mean, remains to be seen how the two companies come together. All sources seem to indicate that it's perhaps a matter of a few more weeks of negotiations as they go through the SPA, and we may likely see an agreement on the table rather soon. As I mentioned earlier, most likely a stock transaction that will allow the two families to have a say in the company.
Manuel, thank you very much. Manuel Baigorri, Bloomberg Deals reporter, with the latest on the consolidation that could take place within the beauty sector. Let's move on to another sector that is very noteworthy and newsworthy this morning. We see oil prices are higher. Let's talk about oil and gas jumping after President Trump, in his address to the nation, signaled an escalation to the war in Iran. He also called on the rest of the world to reopen the Strait of Hormuz, urging them to take the lead in protecting global energy shipments. For more, let's bring in Bloomberg's Middle East energy reporter, Anthony De Paula. It's interesting that once again we're seeing movement, of course, higher in oil, higher in gas prices, higher in refined product, Anthony, and another reminder that it is refined product that sometimes moves more on these kind of headlines. Europe and Asia, for example, reliant on the Persian Gulf for some of that refined product.
Yeah, good morning, Anna. Yeah, for sure, we did not see the markets calmed by the comments from President Trump this morning. He did say that negotiations and talks were still going on. He did express his thoughts that this, as he said, it changed regime is more reasonable than the last. Of course, we've got a Supreme Leader with the same last name as the previous Supreme Leader, and the IRGC military complex still in charge there. And then Trump continued with the threats particularly against the power plants in Iran. If a deal isn't reached, he has threatened again to bomb those. And then he made those comments that the U.S. would continue to monitor by satellite the nuclear sites and continue to potentially attack those. So that kind of gives the markets a view of escalation here. So that's why we're not really seeing much relaxation, and really no sign that the U.S. is going to work towards opening up Hormuz. And of course, it's that strait through which about a fifth of global oil demand passes each day under normal circumstances that is blocked and cut off. And that's really what's starving the market of crude oil to go into those refineries. And so those refineries are not able to produce the products that they need to get to market. Plus, the Gulf region is a huge exporting market. So the Gulf refineries are also not able to get the diesel and jet fuel that they need to sell in the market. They're not able to get that out of the Gulf. So that's also a huge dislocation for the market, Anna.
Interesting to see China telling private refiners to keep fuel production at 2025 levels, Anthony, even if they have to incur economic losses a month into this war, a month or so. Who is it that's managing to get oil through the strait, if anyone, at this point?
Yeah, at the moment, we are seeing that Iran is letting some of its own vessels go through. It's charging tolls to let some other countries' vessels through. So, for example, we've seen Pakistan get a number of ships through. We've got a story on the wire today talking about how Pakistan has offered its flag to some vessels for them to transit through Hormuz. But really, what we're talking about is those tankers that are inside the Gulf and getting out. We've got a number of tankers still in there that loaded up, haven't been able to get out of the Gulf. We're not really talking about tankers going in and trying to load and continue that normal trade. And it's Iran as well getting some of its oil out, still loading at Karg Island. Trump continues to talk about Karg as a key point for Iran. But they are able to load there and get their oil out through the Strait of Hormuz. So there is that trickle, but for all intents and purposes, for the normal working of the market, Hormuz is closed, and that massive supply is not coming out of the Gulf, Lizzie.
Anthony, thank you very much. That's Bloomberg's Middle East energy reporter, Anthony De Paula. Well, overnight, of course, there were two big things we were watching: President Trump's address and the Artemis II launch. NASA astronauts blasting off on a 10-day mission around the moon, marking humanity's return to the lunar neighborhood for the first time in more than 50 years. The US and China are racing to put humans back on the moon, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow has been reporting from the Kennedy Space Center in Florida.
4, 3, 2, 1. Booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time in more than 50 years. Artemis II is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B, here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, the crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis II is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis II are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Ed Ludlow on the ground for us then in Florida, keeping things and travel a little closer to Earth. Let's have a look at where we are on the aviation stocks, because clearly with oil prices moving as much as they are, you would expect to see some negativity coming through on the aviation space. So we've got oil prices are up by 6.6%. That's the Brent price. And as a result, you see Lufthansa, EasyJet, IAG and Air France all down by more than 2%. Of course, there will be hedging, as we said earlier, Lizzie, involved here to try and take the edge off. But really, that's what hedging does, takes the edge off. It doesn't protect you from fundamental, more medium-term changes in pricing.
Yeah, Lufthansa down in particular, 3.8% because of that downgrade by Morgan Stanley. But it comes back to the same reason everybody's down today, which is the higher jet fuel price. We should also flag Air France. It has that bit of M&A news. So Air France KLM submitting that non-binding offer for a stake in TAP, the Portuguese airline.
Coming up on the programme then, we will talk travel and tourism. We'll talk to Irene Hayes, owner and chair of the UK's biggest travel agency, that's Hayes Travel, about the disruption to travel that's been caused by war in the Middle East. It's such an important region for transport through and also visiting the area itself, of course. We'll get to that next. This is Bloomberg.
I'm Alex Rodriguez.
And I'm Jason Kelly.
And we're back with another season of The Deal.
With athletes and entrepreneurs who are changing the game on and off the field. Jerry Jones.
Some good-looking trophies.
1 and 1 is 3 in sports, not 2. And it's because that 3 is imagination. That 3 is putting yourself in a way, having yourself hit the home run.
Erica Ayers-Badon.
I'm a high-energy board member. I'm very passionate. I have a lot of opinions.
Robin Arzón.
I want to light fires in people's lives, and that is still one of my core mandates for all of my businesses.
Justin Tuck.
I tell all of my friends that play in leagues now, make these relationships now while you're hot. Don't wait till you're like your 12th year in and you're just hanging on.
Stay tuned. You won't want to miss it.
Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Key investors, top executives, global innovators. Join me for in-depth conversations with the biggest newsmakers on the day's top stories.
The economy has been doing well. That does not tell you what the future is going to be.
We are taking a step-by-step approach, a very systematic approach with India.
This is a time to put a little more defense into your portfolio.
Insight with Haslinda Amin, only on Bloomberg.
What is going to be the consequence for U.S. markets?
We are seeing modest gains across European equity markets.
Take a look at how we're faring when it comes to Asian markets.
This is the opening trade, 30 minutes into today's session, and this is a look at these markets for you. We're negative across European equity markets, down by around 1.1% on the Stocks Europe 600, and we're only cushioned really because of the presence of big energy names, particularly in London, which is why London is not down quite so much, but elsewhere also. That is one of the sectors not doing too badly. Interesting that food, beverage and tobacco playing something of a defensive role today. That has not always been the case on days of negativity attached to war in the Persian Gulf. But this is the broad picture. And And Lizzie, our colleagues in Bloomberg News have been writing about this phenomenon where we see optimism in the markets at the beginning of the week, more negativity at the end of the week, which makes sense going into any weekend, but especially a long weekend.
Indeed, and perhaps that is the reason that we've got such lower volumes today, down 34%. Also, of course, because we've had such mixed messages out of the White House, not just at 2 a.m. London time this morning in the President's address, but throughout this war. And as a mark of the risk on sentiment that you were seeing, we have 445 members of the Stock 600 lower this morning compared to 106 to the upside. But let's pick out some of the winners and losers, shall we? The leaders today include BP. As you say, we're seeing energy stocks outperforming, Brent edging higher off the back of President Trump's speech. So BP up more than 3%, Total up 2%. Same story, energy really among the few outperformers in the Stock 600 today. But also in the retail space, we've got B&M doing pretty well after getting rated new buy at Kepler Chevreux. So B&M up 5.5% this morning. Flipping over to the laggards, because there are more of them than leaders today. ASML is one of them, down 4.6% after a 6% gain yesterday, mind you. But tech stocks overall dropping. Tech really in the middle of the turmoil because of the war, also with the memory and storage companies especially weak. We've got Siemens Energy down 4.25% after a gain as well yesterday, but this on President Trump's escalatory remarks. This is a company with big exposure to the Middle East, mind you. And Lufthansa, we flagged this for you. Airlines in general suffering today, but Lufthansa downgraded by Morgan Stanley on the risk that fuel costs could prove materially higher for longer because of the conflict, and therefore Lufthansa shares down 4.3%, Anna.
Those are the markets. Let's get an update on some of the top stories we're covering this morning. Oil prices jumping after President Trump vowed an escalation to the war in Iran over the coming weeks. During a rare primetime address to the nation, President Trump said the U.S. military would hit Iran, quote, extremely hard. His comments dampening hopes of a swift resolution to the conflict, which has disrupted energy flows, with the vital Strait of Hormuz still effectively shut. NASA's Artemis 2 mission has launched to space and reached a stable orbit, kicking off a landmark journey that will take the crew of astronauts closer to the lunar surface than anyone has been in more than 50 years. The rocket system, taller than the Statue of Liberty, reached speeds of more than 17,000 miles per hour as it hurtled to space. The crew will spend roughly 4 days travelling to the lunar vicinity, where they will swing behind the moon's far side and be out of touch with Earth for a time. Lizzie.
Well, one of Europe's biggest airline groups has kicked off the race for TAP, with Air France-KLM submitting the first known bid for a stake in the Portuguese flag carrier. That non-binding offer was lodged this morning ahead of an end-of-day government deadline. Portugal looking to sell as much as 49.9% of the airline. Air France-KLM, Lufthansa and IAG were all invited to submit preliminary offers for TAP last year. So that just some of the latest news coming from the airline sector. But more broadly, the Iran war is, of course, disrupting global aviation, with soaring jet fuel prices, airspace closures and widespread flight cancellations hitting airlines worldwide. This crisis now spreading from Asia to Europe as global fuel supplies reach critically low levels. Kate Duffy, our aerospace reporter, joins us now for more on set. And Kate, we do have airline and travel and leisure, I should say more broadly, one of the worst performing sectors today. What should we expect over the coming weeks?
Well, speaking to airlines and their CEOs, it's really still that we're unsure about what's going to happen over the next couple of weeks. They're taking each day as it comes. But what is certain is just price of tickets is definitely going to go up. And that's across the board. So in the US airlines don't hedge their oil. So they're more exposed to the higher oil prices across the board. In terms of in Europe, the airline CEOs have already warned that ticket prices are going to go up as well. And in Asia, it's a similar scenario too. But in the Middle East, you know, the carriers there, they're still really struggling to get their planes off the ground. They're suffering from, you know, closing airspaces because of the missiles flying. And also we've reported that Emirates, you know, is basically flying empty planes back into the region, to Dubai in particular. So this kind of gives you a sense of the demand into the region at the moment that they're facing.
Yeah, absolutely. What about about government responses here, Kate? Because anytime airlines are up against it, there'll be plenty of voices calling for tax reductions, and this is an industry that has attracted quite a bit of taxation in recent years. So what are we hearing in terms of the response from governments?
From governments, it's a sense, especially in Asia, potentially they're warning that planes could get grounded, that maybe airlines coming into the country can't refuel their planes because they want to hoard that jet fuel essentially for their own needs. We're hearing from airlines, especially Lufthansa this week, potentially they could ground their planes if the situation continues and fuel supply shortages wane. And Ryanair is also speaking to its fuel teams quite a lot and just keeping in touch with the situation. So it's definitely impacting airlines across the world.
Yeah, because we'd seen these comments that perhaps April will be OK, but things get real in May. Is that still the thinking?
Yeah, that is still the thinking, yeah. So there's still a bit of time. Obviously, they're just waiting on the situation in the US as to what Trump says and does. But for now, May is when the impact could really show.
And Kate, despite all the turmoil, you've got Air France KLM still finding time for some potential M&A, this bid for a stake in Portugal's TAP. Air France shares, I should say, down 4.25%. Is that a sign that investors don't like the sound of this, or is it just because everybody's down in airline today?
I think it's probably more the latter at the moment. So with the TAP bid, we've also got Lufthansa and IAG in the race as well. Although we did report that IAG is likely to abandon this deal, so it could be that just Lufthansa and Air France go for TAP in the end. We will find out today because obviously that's the deadline. But that will show in terms of investors' confidence as to what TAP means for these airlines.
All right, Kate, thanks for the update. That's Bloomberg's Kate Duffy, our aerospace reporter, of course. Well, broadening the conversation when it comes to travel, let's speak now to the owner and chair of the UK's biggest independent travel agency, Hayes Travel. Irene Hayes joins us now. Irene, thank you for making time for us this morning. So it was quite a bleak picture that Kate just painted for us. How would you say that bookings are shifting in the wake of the war? Are people actually cancelling trips altogether?
Some people are. We're managing to save the sale in many instances, and travellers that would have been going through, say, Dubai or Doha to the east are switching to perhaps short-haul holidays to the Mediterranean. But people still want to take that holiday, and very often they're travelling for family events, say, across to Australia. And we are just having to divert wherever we can. But yes, there's major disruption. And now that we have a full month, the month of March, and we've done all the analysis this week, overall we're down 10% as an average. But as you can imagine, the picture is very different in different parts of the world.
Well, this is quite a long-term question, but let's say that this war is protracted. Do you see other international hubs opening up that might replace the likes of Dubai and Doha?
I think that it's highly likely. I think that normally the travelling public have really quite a short memory, but the longer that this prevails, the more challenging it will be to find alternative routes, because other airlines cannot necessarily get airlift from all of the airports that they want to divert to. So it's challenging, not just as you discussed this morning around fuel charges, which could be one barrier, but the other barrier is their ability to divert and gain access to other airports. So yes, it will in the fullness of time have a longer and bigger impact.
Yeah, Irene, so it could bring about some big change. Let me ask you about the more near-term response then we're seeing from travellers, from customers. You mentioned that some are choosing to go short haul. Is it a sort of wholesale rejection of long haul, or are long haul journeys to, I don't know, the Caribbean and other places still intact?
Oh, yes, very much so. I think there are, without doubt, the Mediterranean resorts are the winners here. And we're seeing significant growth, particularly in Italy, Malta, Croatia and Spain. They are all significantly up for us. But to the other part of your question, people are still wanting to travel long haul. And the winners there are Japan, Australia, South Africa and Canada. As you may imagine, the current issue has had an adverse impact on America, and travel to America is down 32% compared to the same month last year, as are some, smaller destinations in Europe, such as Turkey. That's down, and as you would expect, Cyprus. But no, it's a mixed picture, and people still want to travel long haul.
OK, so people still do want to travel, down 10% as a sort of broad average. That's interesting, that stat you gave us about America, Irene, being down 32% year on year for the month. I mean, what was the picture like before this war? Because anecdotally, we'd heard that there were fewer people wanting to go from Europe to America, perhaps linked to the politics. But you tell us what you're seeing, what you've been seeing in your bookings.
Okay. Yes, we've seen a downturn in America before the 28th of February, when the Ayatollah was killed, and the period of the war had not then properly begun. So we'd seen a downturn in months before that, but nothing as severe as 32%. So we would have seen figures coming through of about 10 or 11% reduction. But there is still a lot of confidence in some parts of America. So Florida, understandably, with the investment that's just gone in from people such as Universal, has seen an increase. And New York and Vegas have seen a significant decrease, as have other parts of the states. But the Sunshine States are still holding up, but not doing as well as they were previously.
And Irene, given the soaring cost of jet fuel, is it that people are opting for train travel instead? I've always fancied the Orient Express.
Train travel was increasing anyway, because touring in general is increasing, and there are lots of new rail products coming onto the market. But it really doesn't have the capacity to take all of the slack from the airlines that are having challenges from airlift and fuel price problems. So yes, trains and touring's doing well, but people are in the main just seeking out alternative routes. You've talked about Lufthansa this morning. Lufthansa is a real option out of the UK rather than going across to Dubai. And hubs elsewhere, Schiphol in Amsterdam. So what we're trying to do, wherever we can, is just divert away from the main hubs. But when you consider that on a normal day, Dubai International Airport would carry about 325,000 passengers, either staying in Dubai or transiting onto places like the Maldives and Mauritius and India. It is really quite a challenge to divert that level of capacity away from east to find alternative routes.
Irene, thank you very much. Thanks for joining us. Good to get your perspective. Irene Hayes, owner and chair of Hayes Travel, giving us a bit of a deep dive into what we're seeing the impact looks like on the travel industry from war in the Middle East. Coming up on the programme then, it is 1 year since President Trump announced his Liberation Day tariffs. What's been the impact of that? We've had a reminder of how this story is not completely done just this morning. We'll bring you all the analysis next. This is Bloomberg.
cidade estava sitiada.
Isso, ao começo, eu não sabia o que fazer. Foi a mais terrível que eu passei na minha vida.
Eu temo, né, que o Brasil se torne, num futuro próximo, um narco-estado.
Porque no final, tudo é dinheiro.
People back home there, they are suffering. And someone is driving a Range Rover with their money.
Where is my money?
I think she's a scam up to now.
It's some of the world's most desperate people who are getting ripped off.
Repeat after me. I am a winner.
I didn't know how big it was. I didn't really understand what I was getting myself into.
If you tell me you have a vision of being $1 billion business, then you're going to have to do what it takes. And if you're not going to do that, everybody's going to suffer.
Una batalla a muerte.
Money can do a lot of good. It can really transform people's lives, but it can also hurt them.
We're at the epicenter of a global realignment on a scale not seen for decades. At the intersection between markets, economics and geopolitics, a forum for sophisticated conversation. This is Bloomberg Surveillance.
Bringing you up to them in the news whenever and wherever it happens. I'm Sherian in Seoul, and this is Bloomberg.
Welcome back to the opening trade. 47 minutes into today's European session, and it's miserable in these equity markets. We already saw losses in the Asian session. We're set to see losses in the US session later, with the stock 600 for now down more than 1%. Particular losses out of Frankfurt for the DAX down 1.4%. The FTSE 100 somewhat cushioned by its exposure to energy, but that is the reason why we're risk off, because we have Brent up more than 6.4% at $107 a barrel this morning. WTI also above $100 a barrel off the back of President Trump's address at 2 a.m. this morning from the White House, essentially telling us that he wants to de-escalate this conflict in Iran, Anna.
Yes, so we very much focus on the impact of war in the Middle East right now. This time last year, we were talking very much about trade. The Trump administration is said to be weighing new tariffs on drug makers and preparing to overhaul its steel and aluminium tariff policy. The moves come 1 year since President Trump announced his Liberation Day tariffs. Brendan Murray has been through the past year with us, Bloomberg's trade czar, and joins us now. Brendan, good morning. Let's start with the here and now. Tell us a bit more about what we have learned about drug makers and the investigations that have been taking place and the tariffs that might now follow.
Yeah, exactly. Both the steel and aluminum and the pharmaceutical tariffs are part of this national security investigations that the Trump administration has conducted over the past year. We're seeing now the 100% tariff on drug makers if they're not producing the medicines in the U.S. or unless they've struck a deal with Trump. 9 of them did so at the end of last year. So this seems to be a move by the Trump administration to encourage those companies to follow through on those pledges. And if not, they're going to face a very steep 100% tariff.
And what's the point of the relook at steel and aluminium tariff policy? Is it simply simplification?
Yeah, I mean, the steel and aluminum tariffs last year got more complicated as the year progressed, and it became nearly impossible for a lot of companies to comply with them to try to determine the amount of steel or aluminum content in the product that they're importing. So the administration heard a lot of complaints, and they've said that they will respond to them, and this is the attempt to do so to try to make that process less burdensome to companies and their bottom line.
Okay, so importantly, it's more for businesses than to help out voters ahead of the elections. Yeah,
I mean, ultimately, that's who would feed the benefits would feed to. But at the moment, it's so difficult to figure out the content of products that contain those metals that companies are saying, look, we've thrown up our hands and we need some help. And so it sounds like like the Trump administration is attempting to do that.
Yes, and can't start. Let's take us back a year then, Brendan, and think about how far we've come on the tariff journey over the past year. Because on the one hand, you can look at the effective tariff rate and say, look, it's 4 times where it was pre-Liberation Day. On the other hand, you can say it's much lower than it was around Liberation Day. What kind of story are you minded to tell about tariffs?
Yeah, exactly. I think the story of the past year was that Donald Trump's tariff bark, the bite was a lot less than the bark. And he came out a year ago today and said, I'm going to put tariffs, very high tariffs on the rest of the world. The markets reacted negatively to that. And what we wound up with was something a lot less burdensome to the economy. It was rolled out over many months. And so the economy had time to digest these higher costs that the president was imposing on American importers in a way that didn't crater the economy. And so what we're left with now is the president trying to rebuild a lot of that now that the Supreme Court has struck down the main tool that he was using. And now we're seeing these pharmaceutical tariffs, these reworked steel and aluminum tariffs, and we'll get more. You know, there's another case coming on semiconductors. And imagine if you put a tariff on semiconductors and products containing semiconductors, you could hit a lot of imports that way. So we'll see how the president rolls those out in the weeks and months ahead.
Well, you're making my head spin with all of these changes that have been, could be in the future. Surely that uncertainty has its own cost economically.
Yeah, absolutely. That was the story all of last year, was the uncertainty, and the president tried to combat that all year long. And now what we're seeing is another round of that sort of uncertainty. If he has to undo the whole sort of tariff program and patch it together with all these different kinds of authorities that he's using, it's very hard for companies to know what they're going to be paying to import goods 3 to 6 months out. So what we're seeing is just another cloud, a different cloud of uncertainty hovering over the economy.
You talked about the contrast between the bark and the bite then in terms of tariff policy from the Trump administration, Brendan. What has this done then overall to flows of trade? Because it seems as if China is still finding markets for its products, just not so much to the US, or not directly to the US.
Yeah, it seems that another lesson of the past year is that global trade is pretty resilient. Trade in goods was up 3 or 4% last year, which is above the sort of mediocre average that it has been over the past couple of decades. This year, obviously, we're looking at the war in the Middle East as another disruptive force that could suppress demand and bring that 3 to 4% rate down to something closer to 1.5 or 2 are some of the estimates that I'm seeing lately.
It's interesting because we had reported that cheaper Chinese goods might be one thing that helps to ease the Iran effect on UK inflation. Just something to bear in mind. Brendan, thank you very much. Our trade czar there, Brendan Murray. Well, let's recheck on these European stocks, shall we? As I say, it's been a bleak morning. Stock 600 down 1% at the moment. The FTSE down 0.2. The CAC 40 in Paris down 1%, but the DAX in Frankfurt down 1.4%. We can get a bit of analysis now with Morwenna Coniam, who joins us from the Markets Today team. Morwenna, is this just a reversal of what we saw yesterday, or is it something more?
I mean, it is a reversal of what we saw yesterday, particularly if you look at the bond market. We saw in the UK some bonds having their best day in weeks. That's really unwinding today, but it's following on from the global trends that by the Fed from the US last night and the expectations for the Federal Reserve. That's flowed through Asia, and now we're seeing it very much in the European morning. It is something more in terms of the hope I think we've been building up to has been dispelled, and it really, I think the fact that we're just sort of back where we started, each incremental reversal, I think, slightly builds in terms of overall sentiment, how seriously they take the next sign of maybe some intention to move forward. I think the lack of a clear exit plan has weighed quite heavily on those who were hoping that this might be temporary, and that really ultimately is going to set into those inflation expectations and the worries about sort of second-round effects and this actually being more protracted.
Yeah, I mean, Moena, when we look at stocks, our colleagues have been writing about how we're following a weekly pattern that looks quite similar week after week of this war, where there's optimism towards the start of the week, perhaps induced by certain types of headlines with some de-escalatory flavour from the US. And then by the end of the week, we are quite negative. And today certainly fits with that theme, doesn't it, as we watch another day of negativity for stocks, nearly all sectors.
Yeah, but it's very broad-based. It is risk-off driven. I think one of the only sectors that's really getting this morning is oil-linked stocks, particularly heavy losses for things like tech, miners, financials. It's very much as you'd expect. But, you know, we're also seeing that sell-off in gold continue as well because interest rates rising on bonds makes that less appealing. So it's one of those risk-off but also quite broad-based sell-offs, and it is. I mean, every region is behaving in a very similar way, and every asset class. So it's quite an interesting but quite depressing morning.
Okay, Moena, thank you very much. Bloomberg's Moena Coniam from the Bloomberg Markets Today team. Time to talk about the weekend, Lizzie.
Yeah, well, we've got all the sports you could ever want. We've got the basketball, the rowing, the football, and of course it's Easter for the chocolate lovers.
Is that a sport? That is definitely the sport that will be practiced in my house, yes. Yeah, as I see, chocolate companies are trading higher today, something about resilience, defensiveness in tough times, perhaps. 8:56 here in London, then the Pulse is up next. I'll be here with the next hour of trade. We'll continue to take you through these market moves this Thursday. This is Bloomberg.
Welcome to Bloomberg This Weekend. I'm David Gura.
I'm Lisa Mateo.
And I'm Christina Ruffini. We're tracking breaking news today from Wall Street to Washington.
Let's start overseas. The sector is really propelling this deal forward.
Yeah, the hope is this will open up new markets and provide some additional liquidity.
Of course, now they're going to have competitors. We got a big week coming up in politics.
Earnings season is underway. We're going to get some key reports.
Everything you need to know before the markets open on Monday.
Introducing Bloomberg This Weekend, bringing a little Bloomberg into your weekend routine.
Guys, buckle up.
Bringing you up-to-the-minute geopolitical news whenever and wherever it happens. I'm Stephen Engel at Japan's Akasaka Palace in Tokyo, and this is Bloomberg.
Making money isn't about drowning in emotions. It's about understanding what's actually happening. Markets are the best way to glean signal from noise, and that is what we try to do every morning. This is Bloomberg Surveillance.
From the beating heart of global finance, economics, and politics, and wherever newsmakers are moving markets, Bloomberg brings you conversations that allow for deep discussions and important insights. What do you think the future is for inflation? Is this a new normal? Are markets too optimistic? How do you worry about the things that are outside your control? How does the current fighting completely stop? I'm Francine Lacqua, and this is The Pulse, every weekday only on Bloomberg.
The countdown is on. Everything you need to get the edge at the end of the market day. Get ahead of tomorrow's trading with The Close. Weekdays on Bloomberg. Context changes everything.
The Middle East and Africa regions are home to some of the biggest deals and fastest growth in the world. Vibrant resources and high-yield investment opportunities abound. I'm Jemana Versace. Join me on Bloomberg Horizon's Middle East and Africa for the stories, newsmakers, and insights shaping the decisions of traders across this exciting region.
You had heightened levels of volatility.
There's still room to maneuver.
Reduce the opportunities.
It allows you to increase significantly your net income.
Every trading day, only on Bloomberg.
Oil jumps and stocks fall after President Trump threatens to hit Iran, quote, extremely hard over the next 2 to 3 weeks, with no clear timeline for de-escalation. Air France KLM shares under pressure after the airline group submits the first known bid for a stake in the Portuguese flag carrier TAP. Aviation generally, though, on the back foot. And back to the moon. Humanity set to return after more than 50 years as Artemis 2 launches an historic 10-day mission beyond Earth. Keeping our feet on the ground, let's have a look at the assets for you this morning. As we flagged in the headlines, S&P futures down by 1%. This in reaction to some of the escalatory language that the market has picked up on from President Trump's speech. We're back to thinking about what that does to inflation. If we don't see the opening of the Strait of Hormuz, inflation in focus, so 10-year yields are higher, and that has spread to Europe as well. Euro dollar 115.33, really just to illustrate the strength of the dollar once again. That is a pretty broad-based trend. We are seeing once again a lot of movement into the greenback. And Brent crude then 107.70, up by 6.5%. So for the conversations that matter and the insights you need, let's get started.
Newsmakers and market movers. This is The Pulse.
Good morning, everybody. This is The Pulse. Thursday morning, I'm Anna Edwards here in London. US President Donald Trump used his primetime address to try to sell the Iran war to the American people and said the conflict is, quote, very close to completion. But he also warned that the US plans to launch fresh attacks within the next 2 to 3 weeks.
We are on track to complete all of America's military objectives shortly, very shortly. We're going to hit them extremely hard over the next 2 to 3 weeks. We're going to bring them back to the Stone Ages where they belong. In the meantime, discussions are ongoing. Regime change was not our goal. We never said regime change, but regime change has occurred because of all of their original leaders' death.
For more, we're joined by Bloomberg's Washington Deputy Bureau Chief Laura Davison with us this morning. Laura, what were your key takeaways then, listening to the president?
So the key takeaways here is that Trump is keeping his options open, really, as he has for several weeks. He said they're going to ramp up attacks in Iran for the next 2 to 3 weeks. And at the end of that period, he wants a deal. But if there's no deal, then he will order strikes on electricity plants within Iran, which would be a major escalation of this war. So we have seen, Trump sort of send a lot of mixed signals, a lot of mixed messages about both what he wants, what he's looking for from Iran, and whether or not, what the state of these negotiations are with Iran. We saw the same, scenario play out here in what was a more formal speech than what we've seen from the president, but there were really no new details, nothing else to really shed light on what exactly is the plan to get out of this war. He had previously suggested the U.S. would withdraw within 2 to 3 weeks. He didn't quite say that. He said that there would be sort of a stepped-up military campaign until then, but didn't give any specific timeline for when the war would end.
Yeah, and the president has made some quite conflicting statements about the role of the Strait of Hormuz in any withdrawal of U.S. troops or escalation of activity in the Middle East. So what did he not clarify in his speech?
He did not at all clarify what role the U.S. would have going forward with the Strait of Hormuz. Instead, he suggested that it was up to other countries, Europe, Asia, Gulf allies, to go in there and take the oil and open it up. And he said they needed to get courage to go ahead and do this. This is really a pivot from what we've seen, just a couple weeks ago, where he was, trying to rally allies to, get military ships into the region to open up the Strait of Hormuz. He now seems to have completely washed his hands of that and says he's walking away and it's not the U.S.'s responsibility. Of course, the U.S. relies on oil from the Strait of Hormuz that passes through the Strait of Hormuz much less than some other countries. However, because of global oil markets, this means that energy prices around the globe are going to remain elevated as long as that is closed. So while the U.S. may not directly be affected by that specific oil sitting in the Gulf there, it is still going to be a political problem and an economic problem for Trump back in the U.S.
Yes, and so now we see more than 30 countries being convened, Laura, to talk remotely, I think, about what level of involvement they might want to have in the Strait. Also addressing the American party, He wrote a letter that was supposed to be, he hoped, widely published in the United States. What were the key messages there?
So the messages here were that essentially that the American leadership is not to be trusted. He said that Americans, this letter was directed specifically to the American people, that they should look past the White House's rhetoric, and that there is Iran has a long history, and that the history between the U.S. and Iran is much understood. And essentially this was a very unusual move to see, and you really see Iran sort of using some of Trump's similar tactics of going out saying that Trump is adopting this maximalist position, sort of really punching back at him in a way that you see Trump take to Truth Social or other social media and lambast allies. So this is, was interpreted very much as a sign of strength from Iran, that they're willing to go toe-to-toe rhetorically with Trump.
Laura, thank you very much. Bloomberg's Washington Deputy Bureau Chief Laura Davison. Joining us now on the programme with analysis, Shaukat Bunglawala, who's Head of Multi-Asset Solutions for EMEA at Goldman Sachs Asset Management. Shaukat, nice to have you with us. Thanks for joining us. I see so many references to fog in lots of research reports right now, because there's, famously the fog of war, and that seems to be being picked up by many investors to describe an inability to have a lot of conviction about what happens from here. How is that fog influencing you and the choices you're making?
Sure. Firstly, thanks, Anna, for having me. So we'd gone into this year expecting above-trend global growth. US growth at probably around 2.5%. We were expecting European growth to be above trend. There was the prospect of easier financial conditions, with the Fed potentially cutting in the second half of this year. That disinflationary trend that we saw last year before the tariffs, we were expecting to re-establish itself at the second half of this year as the tariff noise faded. And there was the fiscal support from the One Big Beautiful Bill in the US, as well as German fiscal stimulus here in Europe. And that's clearly been clouded. There's a number of risks now, and those include, of course, the conflict in Iran. It includes events in the credit cycle. It also includes some of the twin concerns in AI, both as it relates to return on investment, as well as some concern around the impact on the labour market. If you take the first of those risks, as you've been discussing with the conflict of Iran, it's both a function of duration as well as magnitude of impact. On the one side, there's an uncertainty associated with the duration. We've already seen the impact as it relates to shipping being incredibly limited through the Strait of Hormuz. Kuwait, which has significantly reduced oil production, has already said it could be many months before they get back to full production. But there's also the potential for, obviously, escalation. There could be impacts or challenges in the Bab el-Mandeb Straits. There's already been an impact on energy infrastructure in Qatar with the Ras Laffan plant, and they've already indicated that some element, some proportion of that supply is going to take many years to get back into the market. So the concern on this clearly is around duration and potential magnitude. That's having an inflationary effect. We've seen that more impactful in Asia and Europe, where they're just that bit more dependent, of course, on importing energy, and that's consequently had an impact on the path of policy rates.
Yes, absolutely. And there's a lot to think about there. So you started by outlining the growth expectations that you had before the war, before this particular risk loomed on agendas, on investors' agendas. So you expected above trend growth. What's your expectation now? Is it trend growth, or is it well below trend growth, given the scarring, perhaps, to some of that energy infrastructure that has already taken place?
Sure. So we're now expecting trend growth. There's been some clear deterioration, but it's been modest, and that's why we're expecting trend growth. But we're acknowledging that the range of outcomes from here are quite uncertain. Those risks are obviously, any one of those risks could have a significant tail event, so it's worth certainly monitoring.
Yeah, absolutely. I mean, the other things that you mentioned, are they still, we're thinking about the AI story, for example, because, how much is that providing some upside at a time when clearly a lot of investors are nervous, risk off, in today's markets substantially so? How much upside can the AI story provide through this? Because, I mean, there are links, aren't there? Energy is one of the key requirements of the AI rollout.
Absolutely, yeah. It's certainly very dependent on energy. I think there's a significant degree of AI capex, which is certainly supporting growth, and we expect that to continue. In terms of concerns, there's still a challenge as it relates to the forecast around return on investment, and there's also a challenge as it relates to the potential impact on labour market supply. On the second, with respect to private credit and some of the events in the credit cycle, we've also noticed some AI disruption there, particularly as it relates to the software sector, and that's had a material effect. But with private credit, I think it's important to distinguish on the one side sentiment and the other side fundamentals. There's been some concern around redemption activity in these open-ended private credit funds, particularly in the US with some pretty large funds. But we think that's sentiment-driven. That's more about can investors achieve their redemptions, or are these funds going to impose their stated caps? That's more about the extent of liquidity that these funds hold and about fair treatment of investors given their pool funds. We don't think that's related to fundamentals. On the fundamentals, I think it's important to continue to monitor the potential impact as it relates to AI disruption in software sectors, the potential for increases in defaults. To date, it's been quite limited, and also assessing for whether or not there's any reduction in broader lending from banks. But we do think that that's contained. We don't see a spillover effect into broader risk assets at this stage.
And let me ask you about diversification, because clearly that means very obviously diversification across different asset classes, maybe within equities and credit, different sectors, that kind of diversification. But you make the point in your notes, it's also about tail risk hedging, so protecting yourself from some pretty unlikely things, but things that could happen, and trying to find uncorrelated assets. How hard is that right now?
Sure. So I think as multi-asset investors, diversification is obviously very important to us. We think there needs to be multiple types of this. So we've seen the typical sort of ballast that you get from bonds, which are, you're seeking negative correlation to equities. Doesn't always play out. It hasn't played out in this environment, given bond yields have moved up. So firstly, seeking some element of tail risk protection, focusing on asset classes that are perhaps unduly impacted by a prolonged energy supply shock, and therefore buying protection in areas like European equities, we think is prudent. Secondly, recognizing that there could be a market debate around the potential speed and magnitude of central bank policy reaction function, but then also a fiscal response that impacts longer-term bond yields, means that you can seek to take advantage of rates volatility and looking for that protection from larger swings in bond yields, and that can be an uncorrelated source of return in portfolios as well, and that's one of the other things we're doing.
Yeah, I talked earlier about that volatility in bond markets with an FX guest who was talking about the dollar on the back of that and saying there just doesn't seem to be much that stops the dollar right now. Certainly going into a weekend, that seems to be the case. What's your thinking about the role that the dollar is playing in this particular crisis?
Sure. So I think with market moves, we've seen with a more than 50% increase in the price of oil, we're now sustainably above $100 a barrel. You've seen dollar strengthen. You've also seen European and emerging markets equity fall around 10 to 12%. That's more than what we've seen, of course, in the US, which is down around 7% or so. Bond yields have moved up, IG spreads are up, high yield spreads are up about 30 basis points. All of those are probably natural things that you'd expect. But one important thing to also look at is look at the sector composition of equity market returns, particularly in the US. 5 of the 11 sectors are still actually up year to date, not just energy, which is up substantially, but consumer staples, industrials, materials, utilities. And that's suggesting that the breadth is actually still quite robust. Russell 2000 small cap indices up year to date as well. And that's also supported by very positive earnings growth. We saw double-digit growth last year. We're expecting double-digit growth again this year. And that's one of the reasons why we're still constructive over the medium term. So notwithstanding this element of dollar strength as a safe haven, which is reflecting near-term uncertainty, with the overall medium-term outlook for us is still quite constructive.
OK, thank you very much for your time. Thanks for joining us. Shaukat Bonglawala, who is Head of Multi-Asset Solutions for EMEA at Goldman Sachs Asset Management. Coming up on the programme, 1 year on from President Trump's Liberation Day tariffs, and the turmoil is not over. We bring you details on how he plans to target the pharmaceutical industry. That's next. This is Bloomberg.
up-to-the-minute geopolitical news whenever and wherever it's happening. I'm Anne-Marie Hordern in Caracas, Venezuela, and this is Bloomberg.
Thousands of American Marines are heading to the Middle East.
Greece will not participate.
There's a very good chance we're going to end up in a deal.
He's looking at putting boots on the ground.
This is going to be a short-term excursion.
Trust Bloomberg for on-the-ground coverage.
Things are not de-intensifying.
A lot of fear here in Europe. Ukraine is being left out in the cold.
Up-to-the-minute reporting.
The Fujin report has been hit.
Missiles have struck the U.S. Embassy.
And the analysis you need.
The United States military has shown its might. Now it's time to please calm down.
Nobody covers geopolitics like Bloomberg. Welcome to the world of decentralized finance.
Why is it that NFTs have not recovered in the same way that, say, Bitcoin has?
Bloomberg is covering all things crypto.
It's a pretty spectacular story.
The people.
This is the future. This is the 21st century economy.
The transactions.
It snapped up nearly $1 billion of Bitcoin.
And the technology.
We need to build a digital Fort Knox.
That gives people financial freedom, and that's a wonderful thing.
That's extraordinary.
We ride the wave that is Bitcoin.
Bloomberg Crypto, only on Bloomberg.
Astonishing day for U.S. technology.
Shaping the region's technology ecosystem.
Asia's biggest tech news and innovation.
It's Jobs Day, and Bloomberg has the report under surveillance.
Right now, the headline, bad news, is bad news.
This is a stagflationary mix.
It's a double squeeze for the rest of the world.
This Friday, Jonathan, Lisa, Anne-Marie, and Mike will bring you crucial data and expert analysis at terminal speed.
The market is tightening financial conditions. It's not just what's happening present day. It's 5, 6, 7 months out.
The longest first quarter ever continues.
The March Jobs Report, Friday on Bloomberg.
This is The Pulse. I'm Anna Edwards, live in London. NASA astronauts have blasted off on a 10-day mission around the moon, marking a humanity's return to the lunar neighbourhood for the first time in more than 50 years. The US and China are racing to put humans back on the moon too, with NASA working to build a lunar base. Bloomberg Tech co-anchor Ed Ludlow sent this report from the Kennedy Space Center in Florida.
4, 3, 2, 1. Booster ignition.
That was the moment that NASA sent astronauts back toward the moon for the first time in more than 50 years. Artemis 2 is a dress rehearsal, first for NASA's Space Launch System, or SLS, developed by Boeing, which generated almost 9 million pounds of thrust when it lifted off from Kennedy Space Center, Launch Complex 39B, here in Florida. Initially, there's this 2-day orbit of the Earth at different altitudes, practicing burns, practicing manual control of the Orion spacecraft before a translunar injection. That then puts the crew on a slingshot around the far side of the moon. 250,000 miles of distance, a total round trip of 685,000 miles, at one point 4,000 miles from the moon's surface. And in that time, the crew on board are going to be practicing maneuvers, manual control of the spacecraft, communication systems, emergency procedures, because Artemis 2 is just one step in a bigger picture plan to return astronauts to the moon's surface, potentially as soon as 2028. That is America and NASA's goal. And it's been an expensive enterprise, $4 billion per launch, a $93 billion program cost. And it's a race against China, who have their own ambitions to land on the moon. They've stated 2030. The crew of Artemis 2 are expected to splash down on the west coast of the United States in 10 days' time. This is Ed Ludlow for Bloomberg News at Kennedy Space Center in Florida.
Let's get some further thoughts on this quite historic event, really. Bloomberg's global defence editor also covers the space beat for us. Jerry Doyle is with us on set here in London. Jerry, good morning to you. So how much relief, then, do you think there'll be that this went as planned? I mean, these things don't have to... Not everything you do in space is crude, but this was crude, and it's really historic because it's going further, deeper into space than has been done in decades. So a lot more attention on this than perhaps usual.
Yeah, absolutely. Crude spaceflight is very hard
Getting off the ground is arguably the trickiest part of a mission. There's a lot more stress on the spacecraft and the vehicle. So the fact that they were able to carry it off, everything went off without a hitch, no technical problems there in orbit. I think everybody is breathing a sigh of relief at this point.
Yeah, breathing a sigh of relief. And longer term, bigger picture, how important then is this for the future of the NASA space program, for space travel, for those American ambitions in the sector?
I think it's tremendously important. It's going to prove a lot of technology, a lot of procedures, a lot of techniques for operating in orbit, getting things to and from the moon. A lot of different things are going to be sort of proven on this space flight. And if it all goes off without a hitch, and eventually in a few years there are people back on the moon's surface, maybe that will lead to steps farther into the solar system.
What about the European dimension to this, Jerry? I'm not sure if that's something you follow particularly closely, but this was obviously a US NASA mission, but is a US project. But it has international involvement, not global, not China, not Russia, but it does have some global contributions, in particular from Europe. I spoke to an astropolitics professor yesterday who was saying that there is a bit of a risk, though, for Europe, that its role is not quite certain. It was hoping to be involved in a gateway space station that was going to be next to the moon, essentially, but that might be scrapped, and if that is scrapped, Europe's role isn't clear. I mean, what expectations do we have for Europe and its role in this particular version of the space race?
Well, there is some European technology in the hardware that is going to and around the moon. At the moment, NASA does not seem to be planning to do the lunar gateway, the sort of the orbiting station around the moon, and that has sort of led to some disappointment because there was going to be additional European technology in that. However, as the plans for a lunar base become real or become closer to being real, I think there should be some opportunities for European companies and the European Space Agency to get involved.
And we were talking about, decades ago, when this was being done for the first time. This was all part of the Cold War, and it was about a Soviet-US rivalry. Now there is rivalry on space ambition, certainly with China, and to some degree still with Russia as well. What do we know about how much this advances the US cause versus the others?
It's hard to say. I mean, it feels like the U.S. Artemis program is closer to actually putting people on the moon than the Chinese space program, which has landed probes on the far side of the moon, which has ambition for a lunar outpost at one of the lunar poles. So, to the extent there's a Cold War feel to this, it feels like if there is a space race back to the moon, maybe the U.S. is slightly farther ahead, but I think the stakes are somewhat lower than they were during the Cold War. The moon has been visited before by humans, so it's not as much of a milestone as it was in the 60s.
Yes. I wonder how inspiring this will be for people watching it. It's often talked about in those terms. People who got into space decades ago will talk about it being, on the back of the lunar landing. Remind us what the purpose of this trip is, because this isn't actually to land on the moon. The purpose of this, Artemis 2, is to test a lot of the kit that